Yeah. Okay, let's get started. So, yeah, you know the basic smart money concepts, right? The basics like what order blocks are, what liquidity is, imbalances, and all of that stuff. Yeah.
Yeah.
Hope you know that. Yeah. So let's start with this now. Now, do you know about the protected highs and the lows, or is the strong highs and lows? Okay, so let me show you. Something like this is what we call a strong high. Okay, something like this is what we call a strong high. So what you want to see is liquidity being taken out and structure getting broken. So once this happens, we say that this high right here is a strong high. Now I'll show you this will be something very important when we mark out ranges and all of that. Okay, so that's a strong high, and same way, this right here will be a strong low or else a protected low. So what we want to see is liquidity being taken out from a previous low and then structure being broken. So once this happens, this will be a strong low. Okay, now another thing is now when I say liquidity has to be taken out, okay, when I say liquidity has to be taken out, it doesn't have to be like now most people would assume liquidity is equal highs, right? Yeah, this is liquidity, or else maybe trend lines. Okay, yeah, this could also be liquid, but it doesn't have to be this all the time because do you know the three candle formation for a swing high and a swing low? Yeah, the three
I'd
candle
like you to
formation.
go.
Let me
Yeah,
show
I'd
you.
like you to go through it again, please. The three
Yeah,
candle
let me show you.
formation. Yes,
Yeah, let
please.
me show you.
Thank
Okay,
you.
so when I say a swing high, what we want to see now, it's just any three candles. Okay, it's any three candles. So what we want to see is, let me show you a clear example. Yeah, something like this. Something like this is what we want to see. Like let's say we pick these three candles. So what we want to see is a lower high to the left, a lower high to the right, and
Yeah.
the middle candle will turn into your swing high. Okay, the middle candle will be your swing high. So see, even this right here is a swing high. Why? We have a lower high to the left, a lower high to the right. So this will be a swing high. Okay, that little wick right here will be a swing high. See, even this is a swing high, a lower high to the left,
Sorry,
lower high to the
Udara.
right.
Udara.
Yeah,
The
yeah.
previous one you just mentioned now. Can
This
you
one.
show me? Yeah, this one. Yeah.
Okay.
Where's the lower one
Yeah,
to the left?
let me show you. See this? Lower high
Okay.
to the left, a lower high to the right. Just three candles. Okay, we're only
Oh,
choosing
okay.
three candles. One, this one, and then this one.
Okay.
Okay, so if we pick these three candles, we can see that this one is higher than the both of them, right? Higher than the left one and higher than the right one. So which means this will turn into a swing high. Simple. Okay, so it's nothing to overthink. It's something very simple, but it's very important because above every single swing high in the market, there will be buy stops resting. Okay, there will be buy stops resting above every single swing high in the market. Okay, so breakout traders will be placing their buy stops above these swing highs. Okay, so let's talk about that later. And yeah, same thing, like what's the swing low? Okay, what's the swing low? A three candle formation. Let's see a clear example. Let's see a nice one. Where do we have clear ones? Yeah, in all these areas, we do have swing lows. I'm trying to show you a clear one that way you'll understand it better.
Okay.
Um, let's see. Where do we have it? Yeah, here we go. A very perfect example. This is what we call a swing low. Okay, so what we want to see is now in this case, the opposite of what we talked about earlier. A
Yeah.
higher low to the left, a higher low to the right, and the middle candle will turn into your swing low. Okay, the middle candle will turn into your swing low. So this right here is what we call a swing low. Now, once again, this formation is also important because this is where the breakout traders place their sell stops at. Okay, so below every single swing low in the market, there will be sell stops resting. Like look at this, for example. What did this wick do? Okay, what did this wick do? Cleared out sell stops.
Yeah.
See that? So what they did was they took out all of the sell stops that were resting below these lows, and then they went in the opposite direction. Okay, they go in the opposite direction. So that's what they do all the time, from buy stops to sell stops. You know, after taking out this low right here, where will they go next? After taking out sell stops, always go into buy
But
stops.
yeah.
Yeah. So they take that out and then they give you another pullback. Okay. So now when I say liquidity has to be taken out, okay, when I say liquidity has to be taken out, all we want to see is a run above a swing high and a break of a swing low. Okay, a break of a swing low. Now remember, for this liquidity grab, for this top hunt, like we don't care if it happened with a wick, with a body or whatever, but this break right here must happen with a body closing. Okay, we're not going to consider wick breaks to be a breakout structure. It has to always be with a body. Okay, a body has to close below these lows. Only then we will consider this as a breakout structure. Okay, only then it would be a breakout structure. So same thing in here. It has to run below a swing low
Yeah.
and give you a break of a swing high. Okay, a candle closing. So that is what we call a strong high and a strong low. I'll show you examples later. Yeah.
Sorry, Udara. To
Yeah.
buttress what you've just said now. Now,
Okay.
if I've got an example, for example, in GU today,
Okay.
If I look at my chart, due today on the 29th, I think in London's time
Uh,
around 3:30,
okay.
or is it around 5?
What time frame was it? Yeah. Okay. What time frame was it?
M, you can check M15 or M30.
Okay. Yeah.
Yeah, there was a weak break. But on the line charts, it shows like it's a break of structure, a bullish break of
Yeah,
structure.
now I'll show you. Okay, we'll be using the line chart more now. Okay, we'll be using the line chart more. That's why I see. That's why I have it marked. We have it in here. Okay, so we'll be using the line chart more. But don't worry, like we're not gonna get trapped with all of these moves because I'll show you once we go into ranges and all of that, you'll understand like what they're doing in these areas. Okay, you will understand what they're doing. But yeah, like the days like this, I prefer staying out of the market because nothing was clear. No setups. So if there are no setups, we can't force anything, right? We cannot force anything. Okay, so if the setup isn't clear, like if the coast is not clear, we must learn to stay out. Okay, so I'll show you, I'll talk about those stuff later, but let's
Okay.
go through the theoretical stuff first. Okay,
Okay.
so this is what we call a strong high and a strong low. Now, yeah, now you might have seen how these inducement patterns and all of those stuff works, right? So let's say we had a stop hunt, a breakout structure, and then the market might give you a little retracement, and let's say we got another break like this. So now if you just look at basic market structure, what do we have? We have a high, right? We have, and then we got this lower low, right? A lower high and another lower low down here. So now this is just basic market structure. So we know that if price is creating lower highs and lower lows, it's bearish, right? It is bearish.
Yeah.
So now if someone wants to re-enter, what will they expect? Anyone would expect another lower high and a lower low, right? So they'll
Yeah.
be expecting maybe a lower high or something to form in these areas. So what will smart money traders do? Smart money traders will start marking out order blocks in these areas, right? They
Yeah.
start marking out order blocks here. Like some of them will right away set their limits here, stop loss above that, and they'll target lower prices. Okay, so some people would do this. Some people will wait until price gets inside of this, maybe wait for a lower time frame break and then enter. Okay, they will also do that. But yeah, now not only smart money traders are doing this, right? Who else? We have the supply and demand traders, right?
Yeah.
Supply and demand traders might tell you that this is supply that broke the structure. Okay, the supply that broke structure, or else maybe a rally, base, and a drop, right? So supply and demand traders will also set their limits here, maybe with their stop loss above that high. Okay, but not only smart money and supply demand, who else do we have? We have the trend line traders, right? Now, what are the trend line traders doing? Okay, they are also expecting pretty much the same thing, a retracement back into the trend line and then the drop. Okay, so this is what they are expecting. So once it gets back into the trend line, they'll sell it with their stop loss above the previous touch into the trend line and they'll target lower prices. Okay, so that is what the trend line traders would do. Now, not only trend lines, what is this? Break and retest, right?
Yeah.
Break and retest. So what will they do? Maybe wait for that bearish engulfing candle to form, use that as a confirmation, sell it, stop loss above that high. Okay, so that is what the break and retest traders would do. Not only break and retest, this right here is what we call a flip zone, right? Because a broken support will turn into resistance. Okay, a broken support will turn into resistance. So maybe they'll also wait for that bearish engulfing candle to form. And once that forms, they'll sell it with a stop loss above that high. Okay, and then finally, since this high right here is a swing high, what do we have above that high? Buy stops, right?
Rest
We
of
have
that.
buy stops. Yeah, we have a pool of liquidity resting above that high. Now, yeah, now if you know ICT, yeah, you might obviously. So ICT tells you that liquidity is something like a magnet. Okay, liquidity is something like a magnet. So let's say like this. Okay, this is a magnet. And then price. Okay, what is that? Price is like a paperclip. Okay, price is like a paperclip. What happens? It always draws towards the magnet, right?
Yeah.
It always draws towards the magnet. This is what we know. So we have to always know where the draw on liquidity is. Okay, we have to always know where the draw on liquidity is. So now in this bit of price action, where is the most amount of liquidity? Is right above that high, right?
Yeah.
Right above that high. So now as smart money traders, if we do something like this, what are we doing? We're doing the same thing as a retail trader. Yeah, we are retail traders, but we're not using those concepts, right? But if we do this, we're placing the stop loss at the same area where they would place their stop loss at. Because now see, they're entering from a trend line, we're just entering from an order block. So the only difference is the strategy. Okay, nothing else. The stop loss is at the same place. Okay, so what we should first do is we must spot the liquidity. Okay, once we spot this liquidity, now we know that it is not safe for us to look for anything around here. So what we do is we look for something above that. Okay, we're going to look for something above that. Now remember, for this right here, okay, now this is the tricky part. Okay, this is the tricky part. So this could be an order block. Okay, this could be an order block. This could be a breaker block. Okay, so you know what breaker blocks are, right? Yeah, this could
Yes.
be a breaker block. I'll show you examples. And then this could be an imbalance, or else, most importantly, this could be a rejection block. Okay, this would be a rejection block. Now, let's put imbalances aside. Okay, let's put imbalances aside. We're not going to focus on that a lot. But remember, it's just one simple point of interest that we're looking at. What is that? That's the opening prices of the candles. Okay, simply, we're going to focus a lot on, actually, it's not the opening price, it's the closing prices of the candles. Okay, so yeah, the closing price of the previous candle
Closing,
is the opening price of
the
this candle, so
closing
it could be
price.
whatever.
Is
Yeah,
it
I'll
the
show you.
closing or the opening?
Both of them, like most of the time, I'll tell you the most probable thing to do is use the closing price. Okay, use the closing price of the previous candle. Let me show you. I'll show you examples. Okay, so yeah, this could be an order block, a breaker block, a rejection block, or it's an imbalance. So now if you put if you put imbalances aside, we're simply focusing on the closing prices of the candles. Okay, we're focusing on the closing prices of the candles. That is what we are focusing on. Okay, so yeah, so now let me show you. Now let me show you. Now, and the next thing is now order blocks, breaker blocks, rejection block. It's the same thing. Okay, it is the same thing, but like yeah, it's the same closing price. But once we switch time frames, you will get a different view of it. Okay, you're gonna get a different view of it. So let me show you. Now,
Okay.
first thing, yeah, let me show you. So yeah, now firstly, you know how order blocks are formed, right? You know how order blocks and breaker blocks are formed. So let's
Yeah.
directly dive into it. Now, most people would think now, yeah, let's go through that quickly. Now, most people would assume that an order block is a candle, right? An order block is a zone. No, it's not that. Okay, an order block is a specific price level. So what is that price level? So let me show you. Now, first thing, let's say maybe we had liquidity, equal highs. Now, what would retail traders assume? Retail traders would assume that a double top is a sign of a reversal, right? A double top is a sign of a reversal. Or is this the M formation and all of that stuff? Or is resistance and all of that? So they might think that it is a sign of a reversal. Okay, they might think that it's a sign of a reversal. So what they do is, once this breaks, they'll expect a move like this. Right? They'll be expecting something like this. So what will they do? Once it gets here, once it gets into these areas, they'll sell it, stop loss above the double top, and they'll target lower prices. But smart money, okay, smart money knows this. Smart money knows that there's a pool of liquidity resting above those equal highs. So what will smart money do? They're going to force a move now. Okay, they're going to start placing buy orders in these areas. They'll place buy orders, they'll knock out, like they'll take out everyone that placed their stop loss above that high, and then they'll push price down. Okay, so what is actually the order block? Okay, and now the order block will be where the buying started from. Okay, where did the buy start from in order to do this manipulation? Now, why do we call it an order block actually? Now, it's like this. Now, this move to the upside was a forced move, right? This was forced by smart money. But when a buy will only profit when the market is moving up, right? But the market is moving down now. So now what's happening is smart money is now in a drawdown, right? The market makers are whoever that pushed this price to the upside is now in a drawdown because now they have their opened buy positions in these areas, but now the market is moving down. Okay, so what they do is now they do not use stop losses like us. Okay, their pockets are deep. So what they do is they will push price back up into that area where they earlier bought it from. So this is what we call a mitigation, mitigate out of their loss and then push price back down. Okay, so an order block will be this price level where the price level they used to buy it from. Now you might be wondering, okay, so we might have many levels, right? We might have many levels. So I'll show you how to spot the right level. Okay, I'll show you how to spot the right level at least 85% of the time. Okay, so we'll be always going into the higher time frame. So now first thing, now let me show you order blocks, breaker blocks, rejection blocks, all of that stuff. Okay, so let's see. Here we have a nice example.
Yeah.
See that this right here is simply what we call a rejection block. This is what we call a rejection block. So the closing price of the bullish candle or is the opening price of the bearish candle. This right here is what we call a rejection block. And remember, there's a simple rule to it. Okay, there's a simple rule to it. Let's say maybe there is a candle or a wick that has tapped into it like this. Okay, let's say we have a wick or something that has tapped into it like this. So we are not going to use this level anymore. Okay, we're only going to use fresh levels like this. Okay, levels like this. So now look at this. The opening price of the bullish candle is an order block, right? The last push up before the push down. So where did this price tap into? Right into this one. See that?
Yeah.
Opening price or is the closing price of this one. Okay, so price tapped right into this. So the closing price of the closing price of this bullish candle is your order block or is the opening price of this one. And yeah, the opening price of the bearish candle can be your rejection block. Okay, so same thing. Look at this one, even this. Okay, even this is a point of interest. Even this one, even this one. All these areas are POIs, but we're not going to use all of them. Okay, we're only going to use the ones that has liquidity below it. So that's why we like first talked about this one, right? That is why we first came into this example, because now we know that there's a pool of liquidity resting in here, right? So first thing we do is like, we're not going to just directly just mark out a rejection block as an opening price and then wait until price gets there. No, first we spot the liquidity, and only above that we look for a point of interest. Okay, I'll show you examples. See, like even in here, this one tapped right into it. Maybe there was some liquidity in here. Okay, so let me show you some clear examples. Yeah, now look at this one. This right here is what we call the order block. Okay, not the whole candle, not the whole candle like this,
Yeah.
only the opening price of the bullish candle. Okay, the opening price of the bullish candle. This will be your order block. Okay, so we're not going to mark up boxes. No, we're only going to just draw a line, because I told you an order block is a specific price level. So this right here will be that line. Okay, the opening price. So now if you go to lower time frames, now that's why I told you it's the same thing. Order blocks, breaker blocks, rejection blocks, whatever it is the same thing. But once you switch time frames, you will get a different view of it. Now see, the 4-hour order block is what on the 1 hour time frame it is a breaker block.
Oh.
Yeah. On the 1 hour time frame it is a breaker block. So you can even refine that one into this rejection block. See, so you can just go from time frame to time frame. So what
Sorry,
happens?
Udara.
Okay.
On the topic of rejection block,
Okay.
what defines, what makes, like, does he have to grab liquidity for it to
It
be?
doesn't have to grab liquidity. Okay.
It does
Main
not.
thing is it has to have liquidity below it. Okay, it has to have liquidity below it. That's the main thing. Now remember, like, we're not going to use all of the rejection blocks. We're only going to use the ones that are in line with the current market direction. Okay, so once we go into ranges and all of that, let's talk about direction and all of that later. But yeah, we're only going to use the ones that are in line with the current market direction and has liquidity below it. Like for example, this one. Okay, we clearly have equal highs and all of that, right? Our smart money traders, so supply and demand traders, everyone will get trapped, right? Look at that supply. Let's look at that order block. Many are trying to sell it here with their stop loss above that high, but we sell from above it. Okay, so yeah, all the liquidity gets
Sorry,
taken out right
Udara,
into this one. Yeah,
what qualifies this one now as the rejection block? Why
which one?
this?
Now it's like this. Yeah, now you saw
Yeah.
why how we refined it, right? Like we did not just directly chose this one.
Okay.
First, we looked into the higher time frames, 4-hour order block, refined into the 1 hour rejection block like this. A slight refinement. That's it. Okay,
Okay.
and also this is a strong high. Why is it a strong high? Liquidity grabbed,
Yeah.
structure broken.
Yeah.
Okay, so yeah, we have a strong high. We have the high time frame point of interest. That's our 4-hour rejection block. I'm sorry, 4-hour order block that is defined here. And most importantly, we have liquidity below it. And the final factor we take into consideration is timing. So timing is perfect. This is London Open. So this was February. So you can see if I set it to London time right at 8 a.m. Okay, so timing, we're going to focus on all of that. Okay, we're going to focus on timing. We're going to focus on strong highs and lows, high time frame POIs and all of that. Okay, so yeah, that is a simple example. Let me show you some clear ones. Okay, mainly the rejection blocks because it's very important. Let's see some more. Yeah, look at this one. This was clean. Yeah, I'm only showing you rejection blocks. Okay, let's talk about structure, ranges, direction, and all of that later. Okay, now look at this. Yeah, if we go into the H1, and you'll also see that we're not going to use the 1 minute. Okay, let me just delete that. We're not going to use the 1 minute. These are the only time frames that we're going to use. Okay, now don't worry. Even while using this, we will have 2 to 5 pip stop losses only, nothing more than that. Okay, so I'll show you how to get this tight stop loss from the 1 hour and to the 4 hour itself, because you know how messy the lower time frames are, right? It's so much noise. Okay,
Yeah.
so much noise. So yeah, like we're not the algorithm, right? We do not know how to deal with it like very precisely. So the best thing to do is we're going to focus on these time frames and we'll get sniper entries and you'll see all of that. Okay, I'll show you. So yeah, now what is this? A strong high, right? Why? Liquidity taken out and structure broken. Okay, like now in this market, of course, there is no like no reason for you to buy, right? Because look at this one. The major breakout structure is what? Bearish.
Bearish, yeah.
Right? The major breakout structure is bearish. So when the major breakout structure is bearish, what are you going to focus on? Strong lows. No, you're going to focus on strong highs. Okay, because those are the ones that are in line with the direction. Okay, so now we know that major breakout structure bearish, counter trend also turns bearish. So then we call it a range expansion. Let's talk about that later. So this turns into a strong high. Okay, so on the strong high, remember, once the strong high is created, we always look into the higher time frames to see what our point of interest is. Okay, now look at this. On the strong high of the 1 hour, what do we have on the 4 hour? A rejection block. Okay, so now we have everything. We have everything we need. Strong high time frame point of interest, and most importantly, liquidity sitting below it. Can you see that?
Yeah.
We have liquidity below it, a swing high, not just a random swing high. This was actually the previous day's high. Look at this. The previous day's high is liquid. So you know what's above previous day's high, right? A pool of buy stops. Okay, there will be buy stops resting above the previous day's high. So we can mark that one out like this. Okay, and then yeah, now this is a little sneak peek of what we're gonna do. And then the final thing we take into consideration is timing. Okay, the next thing will be timing. So like I showed you, 8 a.m. London time or 1:30 p.m. my time. This was before daylight savings time. So this move could happen either during the London kill zone or London open. Okay, so it could happen like, you know what the kill zone is, right? That's basically the Frankfurt session. Okay, so we're only focusing on the Frankfurt session and the London setup more. So this will be a very consistent setup. Let's talk about that later. Okay, so look at this. So this is the London kill zone right here.
Are you starting from
And
7 o'clock to 10 o'clock for
yeah,
including?
7 a.m. Yeah, 7 a.m. is when London kill zone opens. This was on, yeah, this was February actually before daylight savings time. I'll give you the times that I use right now. Okay, I'll show you. So if I
Okay.
set it to London time, that's London. Let me see. There we go. Yeah, see, 7 a.m., 8 a.m. So what happens? Let's play price forward. And the next thing we're gonna do is we're gonna sell it. Stop loss above the strong high. See that 3.7 pips. And then we will be targeting external range liquidity. Okay, external range liquidity. I'll show you about this. So what happens? Not yet, not yet. There we go. Time is good. There it goes. Right at 7 a.m. Okay, right at 7 a.m. London kill zone clears out this pool of liquid. The previous day's high, Asian high, all of that cleared out into the strong high. Okay, into the strong high. And then what happens? There comes the drop. Okay, there comes the drop. That's it. Okay, so this is a very consistent setup. I'll show this to you later. So you can see what happened, right? Liquidity grabbed into the strong high time frame point of interest, timing. So those are the only things we take into consideration. Okay, so there you go. Taps, and then it starts to drop. Okay, then it starts to drop. So that same way. Now, what happens after this stop hunt and this breakout structure? Another strong high gets created, right? Another strong high gets created right here. This will be another strong high because it has cleared out this liquidity
Yeah.
and it has broken structure. So this turns into a strong high. So once a strong high is created, what do? We go into the higher time frames to see what our point of interest is. So what do we have on the daily? Another rejection block, right? We have an order block. Second, we have a rejection block. Okay, so how are we going to confirm which one is going to hold? Okay, now when there are two POIs, I prefer always waiting for confirmations from one of those zones, either one of those zones, or else maybe timing will be a nice factor. Okay, if timing will be a nice factor. So look at this once again. Let's see at what time price is tapping into these areas. Not yet. There we go. The liquidity below it. Can you see that? Liquidity
Yeah.
below the POI. Okay, liquidity below. I think that's the Asian high. And there it goes. Taps. Yeah. This is it to London time. Look at this once again. 7 a.m. See that? Right at 7 a.m. taps into that and then it starts to drop. Okay, so let's talk about the timing factor later.
Okay.
Sorry.
Yeah.
Yeah, let's talk about the timing factor later. But yeah, that is what happens. See, taps right into it and then it starts to drop. Okay, then it starts to drop. So that's another rejection block. Let me show you more examples because it's very important. Let me show you. Where else do we have there? Yeah, look at this one. Yeah, this was very clean. Where did this one tap into? Where did this one tap into? Right into this one. Okay, why? Why did it tap into this? That's the main thing. Liquidity above it. See that? Liquidity above it. And also, if you use a line chart, you'll see how this low right here is a strong low. See that? Stop
Yeah.
fund, breakout structure, strong low, liquidity, timing, there it goes. Okay, so that's the only setup we're gonna see. And also now, if you drop into lower time frames, look at this. This right here is a major trap. We can call it a major trap or whatever if you want to call it. Look at this. Higher highs, higher lows, higher highs. What will everyone expect? A higher low to form somewhere around here and a higher high, right? This is what everyone is expecting because why? The structure is bullish. Okay, so now maybe some people are waiting. Yeah, there we go. Supply zones, right? Order blocks. Buy it from here. Everyone's buying it here. Now look at this. This is why I told you price is fractal and it's just the closing price we're going to focus on. But once we switch time frames, you'll get a different view. Now on the 4-hour time frame, this is only a wick, right? This is only a wick. But if you go to 30-minute, what is that? An order block.
An order block.
See that? Yeah. On the 30-minute, it is an order block, a full-bodied clear one. And yeah, you can even refine it to this 50-minute rejection block that is in here. See that? The tiny one. Like I'm not going to do huge refinements. I'm not going to take this 4-hour rejection block and then move it all the way down here. No, that's too much. Just a slight refinement. Okay, just a slight refinement. So you can buy it with your stop loss below the 50-minute rejection block. So what happens? Okay, there it comes down, clears out all of this liquidity. Okay, so everyone that wanted to buy here, look at the reaction from that though. Why? Getting everyone hyped up. More and more buyers are getting in,
Yeah.
chasing this move. Okay, so with this rejection, more and more buyers are getting in. But what happens? It taps and then it starts to fly. Like first, what they do is they clear out all of this liquidity. They induce all of those sellers into the market and then they go up. Okay, so that is what happened there. Okay, so yeah, let me show you. Let me show you some more. Same exact setup again and again. Okay, so let's see. Yeah, look at this one. So it's very clean. Yeah, look at this liquidity. You can see this, right? Equal highs.
Yeah.
Okay, equal highs. Like, are we gonna go into lower time frames and then look for POI in here and then sell it? No, right? We're gonna look for we're gonna wait for this to get taken out. Okay, we'll be waiting for this pool of liquid to get taken out. Okay, that is what we are waiting for. Okay, so now look at this. Now, what if we do this? Oh, liquidity, rejection block, sell it, stop loss above the rejection block. What if we do something like this? What happens? Stopped out. Why? Okay, because remember, once we spot the liquidity, we're not just gonna like for the sake of it being a very clear one, we're not gonna use this. Okay, we will always go into the higher time frames to pick our POIs because most people what they do is once they like when they start picking up POIs, they'll just go into the 1 minute first. Why? To get tight stop losses. No, that's wrong. Okay, to like once you spot the liquidity, you have to go into the highest time frame you have to pick your point of interest. Okay, let's talk about that later. But look at this one now. We have this pool of liquid, but on the 4-hour time frame, what do we have? Rejection block in here, right? So now, which one are you going to trust? Okay, which one are you going to trust? Like a random 1-hour rejection block or is the 4-hour? Obviously, the 4-hour, right? The 4-hour is stronger. Okay, so what we do is once we spot the liquidity, we're going to go into the closest higher time frame point of interest, the closest highest time frame point of interest. Like there are times when we will be able to take like intraday trades from the monthly time frame. Okay, I'll show that to you later. Okay, but yeah, this is what happens. So now we have liquidity and this pool of liquid. So what happens? There it goes right into this. Okay, but also remember now, your exits are more important than entries. Okay, anybody can get sniper entries. Anyone can get there, but where are you going to pay yourself? Okay, so that is what's going to determine if you're going to be profitable or not. Because why did I tell you that? Now look at this. With this liquidity grab, okay, with this top hunt, this candle also closed above these highs. Can you see it? It has closed above these highs. So which means, like once again, since it has closed above these swing highs, this low will turn into a strong low. Yeah, it has turned into a strong low. So now if I take a sell here, can I directly target the strong low? No.
No.
Okay, it might be a reversal zone, right? So what we do is we'll have to have safe targets. Now look at this once again. This 4-hour rejection block was a 1-hour order block. See, that same exact thing. Okay, same exact thing. And so what do we have in here? Equal lows. Okay, liquidity. And on this strong low, what's the point of interest you have? Rejection block once again. Okay, so I did not take the sell. I only took the buy. Look at this. So we can buy it right here. We can have our stop loss below the strong low. Okay, we can have the stop loss below the strong low. Look at 3.7 pips. Okay, 3.7 pips. And what happens? There comes the drop. Okay, there comes the drop right into this one. Okay, right into this one. But look at this now. Now, once again, can you see how the bearish candle closed below these lows? Use a line chart. You can see how that high turned into a strong high. Can you see that? Once again, it turned into a strong high. So if I'm taking a buy here, can I target the strong high? No, right? That's wrong. That is wrong once again. Okay, so now we know that, yeah, the cells are already in charge because why? Once again, the major breakout structure is bearish. Okay, and the counter trend is also turning bearish in these areas now. Okay, so which means they are going to drop into the external range liquidity. So the buy that we're going to take is, yeah, it is a risky one, but because it's not in line with the current market direction. But what happens? There it goes. Look at that. Like that's enough, right? That's more than enough. That precision is more than enough because you don't have to go into the lower time frames. You only have 3.7 pips. Okay, you only have 3.7 pips from the 4-hour time frame itself. Okay, now, yeah, I did not take the next sell, but yeah, since this high IT is a strong high, we can still expect this rejection block to hold. Okay, but why didn't I take this? Because no liquidity below it. Can you see that? No liquidity below it. So not a very high probability point of interest. But what happened? There it goes. Taps, starts to drop. Okay, starts to drop. So that's it. Okay, that's it. So I only managed to take the buy. Look at this. You can see how clean that is, right? So that's more than enough. Okay, that is more than enough. So if you risk 1%, you have 16%. I don't risk 1%, but yeah, Okay, so that's that. Let me show you some more. Mm, and yeah, like I'm not gonna tell you these rejection blocks are always gonna give you that tap and run setup. Okay, no, sometimes you will take losses, sometimes you'll be in
Yeah.
drawdowns, but as long as you know how to manage your risk, you don't have to worry about any of that. Because see, in here, of course, you would have got stopped out for sure because he didn't give you that sniper entry, but eventually never went above that high. Why didn't he go above that high? Because it's a strong high. Liquid taken, structure broken, liquidity below it, and there it goes. Okay, so it didn't give you the sniper entry, but yeah, eventually it dropped. Okay, so let's see some more. Um, yeah, see, even this one. That it tap into, right into this. Okay,
Okay.
right into this. Yeah, look at this one. This was FOMC actually. First thing, what is this low doing here? This is a strong low, right? Why is it a strong low? Because liquidity taken off from a swing low, and then structure is broken, not with the wicks, but once you got this body closing.
Yeah.
See that once you got this body closing, we know that this turns into a strong low. Or use a line chart, you see it very clearly.
Yeah.
Okay, you see the formation very clearly. Okay, now look at this. Now this day we have FOMC coming. Okay, so you know what FOMC is? It's high impact news. Okay, so now look what they're doing. They're getting this is how they're getting prepared for news since 5 long days. What are
Mhm.
they doing? Filling up all of these equal lows. Not only that, not only that. Look how many people are getting trapped. Okay, so much of liquidity. Okay, so much liquid build up. So are we gonna sell here? No. Are we gonna buy here? No. We're gonna wait for both of that to get taken out. So now, since we know it's a strong low, we know that yeah, news will push it higher, right? Now this is internal range liquidity. So outside of this will be the external range liquidity. Let's talk about that later. So below the pool of liquidity, what can you look for? A higher time frame point of interest. Now if I go to the 4 hour, what do we have? Oh, we have many. Why? We have an order block, first thing. Then we get a rejection block, and we have another one in here. So are we going to buy from all three of them? No, right? Like at the time you're getting the right trade, your account will be blown. Okay, so now what we do is now, see, once you go into the higher time frames, the guesswork is over. Go to the daily. What do we have? Just one rejection block. See that? Okay, so that's the thing. Once you go into the higher time frames, the guesswork is over. There we go. So now both of the other zones are irrelevant. Okay, because why? The daily is stronger than any of that, right? The daily is anyway stronger than the 4 hour. And then what you could do is, if you want to, you can then refine this into lower time frames. So yeah, I did a slight refinement of this into this one. See, not huge refinements. The original POI was here. I'm moving it here. Okay, like not huge refinement, just a slight refinement like this. And then look at this now,
A
11:30
breakup
p.m.
block.
my time. Sorry.
Is that a breakup block?
That's not a breaker. That is also a rejection block on the 1 hour time frames. Yeah, that's another rejection block. This is a breaker. This right here is a breaker,
Oh,
but
okay.
this is a rejection block. Okay, that's a rejection block once again. Yeah, so let's see. Now see at 11:30 p.m. my time, that is when FOMC comes. So let's see what they're doing. Look at that. How many more are getting in, right? So many. Okay, with this right here, like what if you take this to be a strong high, stop hunt breakout structure? Once again, you're trapped. Okay, once again, you're trapped. So let's see what's gonna happen. There it comes. Right at 11:30. Taps, clears out the pool of liquidity, and then it goes in search of the next pool of liquidity. Why? First, they took out the sell stops, and then they go into the buy stops. Okay, so where are the buy stops? Above, sorry, above all the swing high. So there it goes. You buy at internal range liquidity, and then you exit at external range liquidity. Okay, so enter at internal range, exit at external range. Okay, so a very clean setup. You understand that, right? So that is also from the daily. I'll show you how to do the multi-time frame analysis later, how I do that. Okay, so let's see. Sorry. Yeah, look at this one. Even this tapped right into this. Okay, so these are opening prices. Once again, opening price now. Where do you think this tapped into? Let me show you. See, same exact thing. Okay, same exact thing. What is this? A strong high on the H1. Liquidity taken out. Swing low broken. Right? Swing low is broken. So this turns into a strong high. So like I told you, what do you do? Like once we find out a strong high, we go into the higher time frames to see what our point of interest is. Now on the 4 hour, it's not that clear. Okay, it's not that clear. So what do? Go to the daily. So what do we have on the daily? Yeah, there you go. You can see already what it is. We have the rejection block. See that? We have the rejection block on the daily on that H1 strong high. Okay, we have that one. And then now if we go back to the H1, what do we have below it? Liquidity,
Yeah.
a swing high. Okay, strong high, high time frame point of interest, liquidity below it. You can sell it like this. Stop loss can go above these highs around 5 pips. See, if you can place it above these wicks. Remember, the safe place for the stop loss is above the strong high though, but yeah, it's too much. So you can have it above these wicks right here. And then you can target, once again, the external range liquid that is getting created all the way down here. Okay, so yeah, if I remember, this did not tap on trading view, but if you factor in the spreads, you'll always get tapped in. There it goes. Yeah, taps, and then it starts to drop. See that? Once again, higher time frames. Okay, so higher time frame POIs are very important. The thing is, if we mark out a zone like this, do you think anyone will have an idea what this is? No, right? Just
Yeah.
some random wick. Okay, just a random wick. But like I told you, it's very important. Okay, like you'll have to always pick your POIs from the higher time frame because they don't actually care about the lower time frames. Okay, all they care about is the higher time frame. So we'll have to always understand that. Okay, so yeah, see, even this tapped into this. Even this tapped into this rejection block, but didn't give you that sniper entry. I got stopped out in here because a huge drawdown, 26 pips. Because anyway, I'm not gonna have a 26 pip stop loss above that high. Okay, so
Yeah.
yeah, look at the position from this. See, right into this taps, starts to drop. Okay, starts to drop. Let me show you. Yeah, this right here. In here, of course, the setups were very clean, very clean. Yeah, this was the previous range we had. This was the past week. And yeah, these setups, let me show you. Okay, like we had some very beautiful setups this week. Let me show you that later. Okay, but yeah. So now if we get back into this example, now you can understand this, right? Once we spot this liquidity, we go into the highest time frame we have to see if we have a closing price above it. So what is it? It could be an order block, a breaker block, or else a rejection block, and sometimes an imbalance. Okay, not all the time. I'll show you when imbalances work, but not all the time. Okay, so can you understand this so far? I hope it's clear. Okay, yeah. Now what could happen is next the market might give you a retracement. Once it gets here, yeah, it might give you nice moves. Why? Because there are people who wanted to sell it here, right? Now, some people have already gotten in. Like now the market is going down, so you might get these lower time frame breaks and all of that. So once you get that lower time frame break, another set of traders will be expecting a move like this, right? A retracement back into that lower time frame block that was newly created, and then the drop. So what they would do is once it goes back up, they'll sell it, stop loss above that newly created high, and they'll target lower prices once again. So that way they can increase the risk to reward, right? So this is what the majority of the traders would do. We know that. Okay, this is what the majority of the traders would do. But what happens now? When enough sellers have gotten into this market, smart money will step in and then they'll start placing buy orders, right? They'll start placing buy orders. Why? To take out everyone that wanted to sell here. So now all of the stop losses are taken out, right? All of these stop losses are taken out.
Yeah.
And then what happens? Okay, then what happens now? This right here was not just a removal of the sellers. What else did they do? Now, if you look at market structure, what was price doing? Creating lower highs and lower lows, right? But now all of a sudden you have a move like this. What would people assume? Oh, that's a bullish breakout structure. Okay, so now let's look for order blocks in here, demand zones in here, pull out our Fibonacci's from here to here, enter from the golden ratio and all of that. But where are the stop losses placed right now? Below that low, right? Because why? They want to buy it here. Okay, they want to buy it here. So if you consider this to be a bullish breakout structure, there we go. Okay, that is the inducement. Okay, so that is not actually a breakout structure. It was only a sweep of internal range liquidity. Okay, so once we go into ranges, once again, you'll understand that the range we had was from here to here. So this right here was only internal range liquid. It is not a valid bullish breakout structure. Okay, it was only a sweep of internal range liquid. So now what happens? All the sellers gets taken out. Now buyers are induced into the market in the form of buy stops. See, that's the buy stops that were above this high. It is now activated. And now some traders will think, okay, we have a bullish break. They start marking out order blocks here, demand zones here, or else they'll try to pull out their Fibonacci's from here to here. They'll do all of that stuff. But now where are the stop losses placed? Right below that low. Right? This is where the stop losses are now because everyone wants to. Now, most of the traders are buying this market. So what happens? Quickly comes back down, might get into this area and give you little moves. So that way more and more buyers are getting in and eventually this is what happens. Okay, this is what happens. So the safest place for you to enter is above the pool of liquidity from the higher time frame point of interest like this. Okay, and also the safe place for the stop loss is always above the strong high. Okay, the safe place for your stop loss is above the strong high. But yeah, if you do not like the risk to reward ratio, if the stop loss is too big, you can have it above the point of interest, and then we can target external range liquidity. Okay, we can target external range liquidity. So that is how it goes. So yeah, now like I recommend you do this until you find consistency with this, because now once we do this, yeah, there are times when price wicks out, like wicks us out of the trade, and then it goes in our direction. So that
Mm.
happens sometimes, but yeah, like this is what I do. Okay, this is what I do, but try doing this, you'll see how your win rate increases because it's a strong high, right? They're not
Yeah.
gonna take that out anyway. Okay, so they might, but not all the time. Okay, so yeah, this right here is what happens. Can you understand this? I hope it's clear. Yeah.
I do. I do.
Okay. Yeah. And then okay, give me 1 second. Yeah. So same thing. Okay, same thing happens in a bullish market. Okay, same thing happens in a bullish market now. Sorry, now we can see how the market is creating higher highs and higher lows, right?
Yeah.
It's creating higher highs and higher lows. So yeah, now I showed this to you, right? This example, something like this. So what will everyone expect? Another higher low to form here, and then a higher high. So might give you reaction. So more and more buyers are getting in. But what we do is we look for a point of interest below the pool of liquidity. Okay, and also remember, what makes this a high quality point of interest is the liquidity that is resting above it.
Good.
Okay, so same thing in here. What makes this a high quality point of interest is the liquidity that is resting below it. Okay, so same way. So now what would happen is when enough buyers are in this market, smart money will step in, or else when the time is right, let's say London Open or something, they start selling it. No. Okay, they start selling it. And then what happens? Everyone that wanted to buy here, including the ones that were waiting for confirmation entries, are now taken out. Okay, everyone is taken out. And then what happens? Sellers are induced in the form of sell stops, right? Sellers are induced in the form of sell stops. And not only that, now we saw how the market was creating higher highs and higher lows, but all of a sudden we have this. Now people would assume, there we go, we have a bearish breakout structure. So now people might start looking at maybe supply zones in here, order blocks in here, drawing their Fibonacci's from here to here, maybe waiting for trend lines to form, and all of that stuff happens. But once this gets taken out, it taps into a high time frame zone, and then it goes up. Okay, so once it taps here, it might give you reactions once again, and eventually this is what would happen. Okay, so the safe place for us to enter is below the pool of liquidity. Okay, below this retail pool of liquidity. And yeah, the safe place for the stop loss is also below the strong low. But like I told you, if it's too big, you can have it below the point of interest, and yeah, you can target these highs. Okay, so this is what happens. Okay, I'll show you all of this later. Okay, and then now let's talk about that London Open setup I told you about. Okay, because it's a very consistent setup. Okay, it is something very consistent in the market. But in order to understand that London Open setup, you will have to understand Asia. Okay, you'll have to understand Asia first. Now, yeah, now most of this is from ICT. So if you have watched the ICT stuff, you will know this. Okay, you will know this already if you know the ICT stuff. Okay, but yeah, let's see. Okay, let's see. So yeah, first thing is, now you would have seen that Asia does not move a lot, right?
Yeah.
Asia does not move a lot. So like most of the time, Asia is in a consolidation. Okay, now I'll tell you what to do if Asia moves a lot, but yeah, not all the time. Okay, not all the time. So let's say this right here was Asia.
Sorry, Udara. From what time to what
Yeah,
time do you mark your Asia?
yeah, I'll tell you. Okay, so Asia is from 5 p.m. New York time to New York midnight time. Okay, so that will be Asia, 5 p.m. New York time to New York midnight time. Okay, so that those are the Asian times that I use. Now, don't trust the times on Google and stuff because it changes from time to time, and like Asian session is very important, so you will have to always mark it out properly. Okay, the Asian highs and lows must be marked out properly for you to get a bias for London and all of that. Okay, I'll show you how important that is later. But yeah, now what happens is, now I'll give you the timings and all of that at the end of the session. Okay, I'll give you the times that I use. Okay, yeah.
Okay.
So let's say this right here was Asia. This right here was Asia. So now what happens? Now there's a set of traders, the breakout traders. What will they do? They will be placing their buy stops above Asia and their sell stops below Asia. Because what are they expecting? They're expecting a move like this. In case if the market breaks above the Asian highs, they're expecting the whole day to be bullish. Okay, and that same way, if the market breaks below the Asian low, they're expecting the whole day to be bearish. Why? Because since Asia is the first session of the day, yeah, that is what they're expecting. Okay, that is what the majority of the traders will be expecting. So a pool of buy, like a lot of buy stops are placed above Asia, and a lot of sell stops are placed below Asia. Okay, so then now, there's not only retail traders, right? There's not only the retail traders that are in the market. We have smart money. So smart money knows that there's a pool of liquidity above this high. So what they do is, remember, after the New York midnight time, they will give you a false run in the opposite direction, right? A false run in the opposite direction like this. Now, what happened? First thing, buyers are induced, right? Buyers are induced into the market in the form of what? Buy stops. Okay, buy stops are activated. And not only that, trend lines are forming. You can see this all the time. Bullish order blocks forming. What is everyone expecting? Oh, it's going to be a bullish day. Let's buy this. Okay, everyone is expecting a move like this. But when London kill zone or as London opens in here, it reverses. Okay, it reverses. So this is something like the power of three ICT talks about: accumulation, manipulation, and then a distribution during the London close. But we don't care about the London close. We only focus on London open. But yeah, this is what happens. So what we will be doing is we will be looking for a higher time frame point of interest above Asia where London could get into. Okay, where London could get into. This is what we will be doing. A higher time frame point of interest above Asia where London could get into. And also what makes this a high quality point of interest is the Asian highest liquidity sitting below it. Okay, and also remember, we will mainly be hunting this setup not when the market is bullish. Okay, when the market is bearish, okay, when the higher time frames are bearish, when it is heavily bearish, this right here will be a very consistent setup that you could look into. Okay, I'll show that to you later. But can you understand this? This is what happens. Okay, this is what happens. But yeah, and ICT calls this a nice name, right? You know what it is? The Judah swing. Okay, this is what we call the Judah swing once again. So the false run in the opposite direction after the New York midnight time. Okay, that is what we call the Judah swing. Okay, that is what we call the Judah swing. So, like he tells you, like, what's the meaning behind the Judah swing? Okay, he tells you it is like taking these sheeps into a slaughterhouse. Okay, taking these sheeps into a slaughterhouse. So everyone starts to buy this, but when London opens, it reverses. Okay, so can you understand this? Hope it's
Yeah.
clear. Yeah. Okay, so same way, after the New York midnight time, we might get a false run in the opposite direction like this.
Mm.
Right, so what happens? Sell stops are activated, trend lines are forming. Okay, trend lines are forming, and then maybe bearish order blocks are forming. Everyone's expecting this. Okay, everyone's expecting this to happen. But when London opens here, what happens? It reverses. Okay, it reverses. So what we do is we look for a higher time frame point of interest below Asia where London could get into. Okay, where London could get into. So once again, this is that Judah swing I told you about, the false run in the opposite direction after the New York midnight time. And yeah, so this move right here, this manipulation mainly happens during the London kill zone or London open. Okay, so those are the time window. Yeah, that's the time window when we should stay active on the charts to see this setup happening. Okay, so yeah, that's about that. And then now, what if Asia does something like this? Let's say Asia has done something like this. Yeah, what has the Asian low done? It has created a strong low, right? So liquidity taken out and structure broken. So Asia is strong now. Okay, Asia is strong. Now remember, when Asia wasn't strong, what did we expect? A manipulation of the Asian low, right? But remember, when the Asian low is strong, we do not expect a manipulation, we expect a mitigation. Okay, we expect a mitigation. A mitigation into what? Okay, now remember, when Asia is a strong low, okay, when Asia is a strong low, on the 4-hour time frame, it always happens, an order block or else a rejection block will be created in this area. Okay, when Asia is a strong low, an order block or else a rejection block will be created in this area. So we're not expecting London to do this. We're not going to expect a sweep of the Asian low. What we are expecting is, instead of a sweep of the Asian low, we're expecting a retracement, a mitigation actually, a mitigation into the Asian low, I'm sorry, into the 4-hour point of interest during London open or as the London kill zone, and then a continuation. Okay, so this is what happens when Asia is a strong low. Okay, not every single day Asia will get yeah. Okay.
I'm sorry, there are. Yeah, I have a
Yeah.
question. For this setup, is directional bias any important?
Directional bias is important. Okay, directional bias is important. So I'll show you how I get the directional bias. That is like we will have to mark out a range from the through ranges is where how we get the directional bias. I'll show
Okay.
you. Okay, now yeah,
Okay.
you can even get this. You can even get this without the directional bias. But if this is in line with the directional bias, this is very important. Okay, it will be even more problem. Okay, it will
Okay.
be even
Okay.
more high problem. Okay, so now what happens is now, like I told you, an order block and a rejection block. Both of them will get created. So are you going to buy from both of them? No, you're not going to do that. When there are two POIs, what we do is 50 minutes is the lowest time frame you use. We wait until price gets here. We wait for a breakout structure. So once the strong low gets created, then we're good to buy. Okay, but if price runs straight through it, if price runs straight through the first POI, then we buy from the bottom one directly. This is what I do. Okay, from the bottom one, I do a direct entry. But if price gets here and gives us a bullish breakout structure, then we get the confirmation. But if it does not do that, we're going to buy it from the lower one directly. Okay, so that is what we'll be doing now. Now there are times, like sometimes the bullish order block is here and the rejection block is here. So then what I do is I buy it with my stop loss below both the POIs. Okay, so even if it taps into these areas, we're still safe. Okay, we are still safe. So
sorry,
yeah,
yeah. Would you talk about your confirmation entries later?
yeah, let's talk about confirmation entries later. Okay, I don't normally do that a lot. Okay, I go with the direct entries because if timing is good, if it's a strong low, it has liquidity above it, I'll be buying it. Okay, I'll be taking the trade directly, but only sometimes we do confirmation entries. I'll show that to you later. Okay, I'll show that to you later. But yeah, so that's about that. That is about that. So remember, when Asia is a strong low on the 4-hour time frame, an order block or as a rejection block will be created. So London kill zone or London open, what it does is it comes back into that, not a manipulation, it gives you a mitigation. Okay, a mitigation of that, and then a continuation. Okay, so this is what we could expect. And also just remember, like, it's not a main thing, but if there is a if there's a point of interest lining up with the Asian midline, that is also high problem. Okay, that is also high problem. Like sometimes the 4-hour order block could be with the Asian midline, so that can be used for extra confluence. Now, yeah, like we're not just gonna mark out the Asian midline every day and then look for POIs on that. No, not all the time. Okay, if it is there, that's it. Okay, it can be used for extra confluence. Okay, so this is what happens if Asia is strong. Can you understand this? Hope it's clear. Okay, yeah. And same thing in here. If the Asian high is a strong high, okay, if the Asian high is a strong high, we're not going to expect London to do a sweep of the Asian low and then go back into the Asian highs. No, what happens is on the 4-hour time frame, an order block or else a rejection block will be created. Okay, an order block or else a rejection block will be created. So what happens is London kill zone or London open will come back into that and then give you a continuation. Okay, so that is what happens when Asian high is a strong high. Okay, and the final one is, what if Asia is trending, like without creating any strong highs or lows? What if Asia has done this? Okay, remember, if Asia, I'm sorry, I'm having a sore throat. Okay, yeah. Now, if yeah, if Asia has moved for more than 50 to 60 pips, okay, if Asia has moved for more than 60 to 60 pips, okay, we are not expecting London to run above the Asian high. We can just assume that Asia has already created the high of the day. Okay, Asia has already created the high of the day. Remember, if Asia is trending for more than 50 to 60 pips, like this, I prefer staying out of the market because the setup will not be clean. Okay, like I'll show you. When this happens, like no day the setup will be clean. When Asia has moved a lot, London open setup will not be any clean. Okay, so the best thing to do is, yeah, just keep one day and then look at the charts the next day, because we can't just force setups, right? Just for the sake of trading. No, it has to have your confluence. So if Asia has done this, just stay out. Okay, stay out. So same thing in here. If Asia is moving up for more than 50 to 60 pips, let that day go. Okay, because the setup will not be clean. Like London will sometimes do this. Okay, like London will sometimes do this, sometimes do this. Like I have no idea where it's getting into. Okay, so let's just let that day go. Okay, yeah. So like for example, today, what happened? Asia has moved for more than, how much is that? 50 pips? No, too much. 89 pips. Okay, 89 pips. So I have no idea what happened. So I was looking on gold. I'll show you what happened on gold. So let's let that day go. But look at what happened in here. We had Asia. We got that false run in the opposite direction and boom, started flying. Did you see that? So this right here is what we call the Judah swing. The false run in the opposite direction. Okay, the false run in the opposite direction. So what happened? See, like everything I told you happened. Look at this. Trend lines forming. Yeah, trend lines are forming. Order blocks forming, maybe supply zones and all of that. So now what's the time when we focus, like what's the time we expect this manipulation to happen? Like what's the time we expect the reversal to happen? London open or is the London kill zone. So below all of this, we had a breaker block. Can you see it? We had a breaker block in here, but I wasn't expecting, like, I missed the trade because let me show you where I was looking into. I was looking at the 4-hour rejection block that is in here.
Mm.
Can you see it? Okay, but yeah, it tapped into this 1-hour breaker for some reason. Like, that's okay. We're not gonna like force moves just because it goes. So what happened? Okay, there it comes, taps right into it. Okay, and then the next thing we take into consideration is what? Timing. Okay, so now look at this one. This is London Open. Okay, so 12:30 p.m. is when London opens for me. Like if I set it to London time, you can see that is at 8 a.m. Can you see it? Right
Yeah.
at 8 a.m. London time, a sweep of the Asian low. Okay, a sweep of the Asian low. So now a lot of sellers are in this market because, sorry, we have this trend lines forming, we have these supply zones forming, and all of that happens. But what happens? There it flies. See that? Okay, so it happens. It happens all the time. Okay, it happens all the time. So that is that day. So let me show you some more. Yeah, this day, of course, what do we have? What has the Asian low done this day? Asian low has created a strong low. See that? Asia has created a strong low. Why? And also remember, when you're looking into this Asian strong low thing, the minimum time frame you're going to look into is the 30-minute. Okay, because if you just go to the 5-minute, every single day the high and the low will be strong. Or the 1 minute. Okay, don't do that. The 30-minute will be the minimum you use to see if the Asian high or low is strong. Okay, so now in here, the Asian low is strong, right? Liquidity taken out.
Yeah.
Yeah, and then structure broken. Structure broken. So on the strong low, what do we look for? Higher time frame point of interest. What do we have on the 4-hour? Rejection block. Okay, we have the rejection block, but this wasn't a very clean setup. Okay, which means like this setup did not play out very nicely. Why? Because timing wasn't that good. So this is the time when we expect the mitigation. It is 7 a.m. or as 8 a.m. London time. This is when we expect the mitigation. But if it does not happen at like I'm not saying you can't take the trade, you can, but it's not going to be that good. Look at this. See, did not get here by then, but it came here during New York. There it goes. See that? Strong low. Taps, it starts to go higher, but the move is not going to last long because, yeah, now the London, I'll tell you this. The reason I'm telling you to trade London kill zone or the London Open is because remember, London kill zone and London Open has the most chances of setting the high or the low of the day. Okay, has
Okay.
the most chance of setting the high or the low of the day. Like obviously not when the Asian low is a strong low, then Asia has already set it. But when Asia is not a strong, when Asia is not strong, London kill zone and London Open has the most chance of setting the high or the low of the day. So if you manage to get that, you're in profit for the next 24 hours, right? So that is why I always focus on London Open a lot. Okay, so that's why I tell you to do that. But this one right here, it did not give you the mitigation at these times. It gave this mitigation here. Like it was during the session. It was like 2 hours after London. It gave you a nice 57 pip move. So I was expecting on like I thought it might even get hit to these areas, but nah, timing wasn't that good. So see that? So timing is one key thing that we should focus on. Okay, now look at this one. This was very clean. What has the Asian high done? The Asian high is a strong high, right? Why? Liquidity taken out and structure broken. Can you see it? Okay, liquidity is taken out, structure is broken. So on the strong high, what do we look for? High time frame point of interest. There we go. What do we have? Rejection block.
Yeah.
Okay, yeah, we have the rejection block. Now look what happened. Okay, never tapped into it. Can you see it? Never tapped into it. Okay, and why? Because timing isn't that good, right? What's the time when we want this mitigation to happen? London kill zone once again, or else London Open. But at what time did it come here? Not at those times of the day, right? So which means this high will once again get taken out. Can you understand that? That
Yeah.
high will be taken out. Okay, so now what happens? Now once again we can set it. Okay, right here. Stop loss can go above this wick or else above the strong high if you want to. And then we target external range liquidity. Okay, we target external range. So what happens? There it goes. Timing is good. 8:15 a.m. Can you see it? Right at 8:15 a.m. London time. Okay, 8:15 a.m. London time. Tapped into the strong Asian high. Took out this liquidity. And then comes the drop. See that? So that's it. Okay, that's it. So, and this is from the 50-minute time frame is here. So this is more than enough, right? This is more
Yeah.
than enough for the day. This is all we focus on. Okay, now those days I used to do this ping pong stuff on the 1 minute, but like if you're dealing with live funds, you will know how stressful that is, right? Like trying to chase every single 1 minute move. Okay, no,
True.
that's so much stress. Okay, so
Mm.
we're not gonna do that anymore. We'll only be focusing on this. Okay, so yeah,
Yeah.
that's that. This day, of course, I have no idea what happened because it has cleared out a bunch of external range liquidity from the even from the weekly time frame. So it just yeah, it just did something and flew up. I don't know what happened. Let's let that day go. Yeah, let's look at this day. Let's look at this day. Look at this. What has the Asian high done? The Asian high has created a strong high, right? Why? Liquidity taken out
Yeah.
and a swing low is broken. Strong high, liquidity. Okay, and then we had a rejection block. Oh, once again, this day I missed the setup because on the 4 hour we had the rejection block up here. So I was waiting until this one played out. But look at this. See, because now I would have done this if the two POIs were like very close to each other, maybe something like this, then I could have had my stop loss above both the POIs like this. Okay, so I didn't want to do this, so I just had to let that go. But if we did this, let's say with a 5 pip stop loss, maybe look how quick the setup was. Okay, so strong high, liquidity below it, and there you go. Taps, starts to drop. Okay, so 1 hour rejection block, and then it starts to drop. Okay, so that was that day. It was very clean. That was not London. This was New York. Right? This was yeah, it was during the London session actually. Okay, let's see. Let's see some more. Yeah, look at this one. We had Asia, and the falls run in the opposite direction. Can you see after the New York midnight time? There
Yeah.
comes the Judah swing. Okay, so what are they doing? Trend lines forming, order blocks forming, all of that formed. But look at the time, 7:45. Reversal time. Boom. It starts to fly. See that? So that's it. Okay, that's it. That's it for that day. Look at this one. This was very clean. No, why did I put it there? Show you. Okay, we have Asia. Now ask yourself, is the Asian high a strong high? Obviously not, right? Look at this liquidity. Okay, you can see that. So above Asia, what do we look for? The closest higher time frame point of interest. Okay, so what did we have on the daily? We had an order block. I'm sorry, a rejection block. All the way up here. Can you see it? We had a rejection block all the way up here. Go to the 4 hour. You can do a slight refinement of this into this one. See that? Not huge refinements. You're just moving it a little bit into these areas. Okay, so then what you do is, what's the next thing you take into consideration? I told you, timing, right? So this should happen during London kill zone. So that is 7 a.m. New York time, or else during the London session at 8 a.m. Not New York time, at 8 a.m. London time, like this. Okay, so let's see what's going to happen. Asia can sell it. Stop loss above the rejection block, 3.3 pips. First target will be Asia. Second target will be external range liquidity. Okay, second target will be the external range liquidity. But this must be your first target because as an intraday trader, we must always play ourselves there. Okay, we must always play ourselves there because there are still chances of price reversing. Okay, we don't know. Okay, so let's see what happens. There it goes. And right at, what's the time? Right at 7 a.m. Can you see that? Right at 7 a.m., tapped into the point of interest, the daily rejection block that was defined to the 4 hour, and then gives you the drop. That's it. Okay, so you have 54 pips, and how long did it take you? Just 1 hour. Okay, so that's more than enough, right? That is
Yeah.
more than enough. That's done. That is done for the day. Or else, let's say you missed it. No problem. I told you the lowest time frame you go is what? The 50-minute, right? So we can look for a confirmation entry. So how do we look for the confirmation entry? Like we're not gonna just use some other strategy to get the confirmation. No, okay, we're doing the same thing. Say you missed it. What do we have on the 50-minute? Stop fund, breakout structure, strong high, liquidity, high time frame point of interest, order block, and the rejection block. See that? Okay, it's the same exact thing. Then what we could do is sell it, stop loss above both the POIs, 5 pips, and then we can target the low that is getting formed in here, like this. So what happens? There it goes. Taps and it drops. Can you understand it? Okay, you can see that, right? When we have two POIs very close to each other, we can sell it from the first one with our stop loss above that high itself. Okay, like above both the POIs. Okay, so that was very clean. That was that. Can you understand the two setups? Hope that
Yeah,
was clear. Yeah, let me show you some more. This day I got stopped out at break even. Let me show you. Go to 30-minute. What has Asia done? Created a strong high, right? Liquidity taken out. Structure broken. An internal range liquidity. Rejection block. See, like, can you see how I'm showing you the same exact thing again and again? Okay, stop on breakout structure, strong high, internal range liquidity, high time frame point of interest, and then this. Okay, stop loss can go above the strong high, only around 3.5 pips, I guess. Yeah, and then I was targeting this low. We show you what happened. There it goes, and the timing is also good. Why? It's at 8:30 a.m. That is when it happened. Okay, so it tapped, came down. Now I was at break even, and then all of a sudden this happened for some reason. Okay, I don't know why. I didn't even pay myself, but yeah, this happened for some reason. So yeah, got stopped out at break even. That's okay. That's okay. Like, don't worry. I'm only showing you the Asian setup. Okay, nothing else. Let's talk about direction and all of that stuff later. Okay, I'll show you
Okay.
that later. Yeah, I'm only like showing you what's happening with Asia. Yeah, nothing else. Okay. Yeah.
Yeah.
Now this day, of course, sorry. I'm really sorry. I'm a bit sick today.
Oh,
Don't
bless.
mind that.
Do you have
Yeah.
water with you?
Sorry?
Do you have water? Water.
Yeah. I got some water right now.
Okay.
Okay. Look at this. Now, even in here, I was expecting stop on breakout structure strong high. This liquid to be cleared out, and then this. Okay, so this is what I was expecting, but we didn't get that. This actually tapped into another 4-hour rejection block during New York, but not New York actually. Even that was during London, but without this liquidity being cleared out, it's not good for us to like. It's not. It might not be a very high probability trade, right? So had to let that day go. Let me show you. Yes, okay. Yeah, see that? Right into this one for some reason. Yeah, I don't know why it tapped there. So let it go. Okay, let it go. Not that clean. Yeah, look at this one. This was very clean. The next day setup. Look at this. Major breakout structure. What is it? Bearish, right?
Yeah.
We have a major breakout structure that is bearish. So which means every single move to the upside is only a stop hunt, a hunt for buy stops. Okay, so now the Asian high looks like a strong high, right? Why? Liquidity taken out and structure broken.
Yeah.
Okay, it looks like a strong high, but if you go to the daily, right above Asia, what did we have? We had a rejection block.
Rejection block.
Yeah, on the daily.
Yeah, daily,
So now, yeah, just look at it. Now, is it safe for us to take a direct sell from Asia when we have a daily POI above it? Not safe at all, right? Not safe at all. But yeah, let me show you what happened. Look at this. Now, since Asia was a strong high on the 4-hour time frame, the rejection block was created, like I told you. Rejection block is created. So now I told you, what do we do when we have two POIs? Okay, first we wait for reaction from this. If price runs through this, we can enter from this one directly. So we can refine it into this imbalance. Can you see it? We can refine it into the imbalance. So if price runs through this, we can set it from here. But if it taps here, gives you a breakout structure, then we get the confirmation entry. Okay, so then look at this. Okay, so yeah, now even in here, what happened was a sweep of Asia. And yeah, you know at what time it happens. 7 a.m. or else 8 a.m. is the time when we expect it to happen. Is the time when we expect it to happen. So we can sell it. Stop loss above these highs right here. Right above the, yeah. So even if they tap into these rejection blocks, we're safe. And then we target external range liquidity. Okay, and remember, we're waiting for a reaction from this zone. Okay, so what happened? No reaction, straight through it. Can you see it? So no losses. That's it, because you were waiting for a confirmation from here anyway. Okay, then what happens? Okay, there it goes. Right at 7 a.m. Here, right at 7 a.m., a manipulation of the Asian high into the daily rejection block, and it comes down. That's it. Okay, so can you see the consistency in that setup? Same exact thing. Asia, pause run, then it starts to drop. Okay, so like look at this. Trend lines forming, order blocks forming. How many are trying to buy it here? So many, right? So many traders are trying to buy it here. But what happens? Since London opened here, it's reversing now. Okay, it's reversing here. Actually, this the reason for the reversal in here is, of course, like not just because it swept above Asia. There are other reasons. Let's talk about that later. Okay,
Yeah,
let's talk
sorry,
about that.
Dora. Yeah,
Yeah.
for this one, yeah,
Yeah.
I've got one question.
Okay.
If do you always mark out your daily high? If it's above
Uh,
Asia, would you trust the Asia high?
it's like this.
If the
Okay, now
previous day high was
it
above
doesn't have to
Asia.
be, it doesn't have to be a daily point of interest all the time. But let's say we have a like maybe even H1. Let's say we have something like a H1 rejection block or something right above Asia, even though the Asian high is strong. Okay, let's say we have something like this on the H1, even though the Asian high is strong. Even then, it is not safe for you to directly take a trade from Asia. Okay, so you wait for a point of interest, you see if price is giving you a reaction from this point, but if it is not, you can then enter it after the manipulation. Can you understand that? Hope that
Okay,
answered your question. Yeah.
that it does. Yeah. For the
Yeah. Okay.
reaction, do you wait in M15 or what time frame do you wait?
Yes, M15 is the lowest I go. Okay,
M15.
M15 is
Okay.
the lowest I go. Because the thing is now, we're not going to wait for these huge structural points to break. We're only waiting for a three candle formation to break. Okay, the
Okay.
swing low formation. Like a break like this. Yeah, exactly something like this. This is what we want to see within the point of interest. Let's say this thing was a point of interest, and on the M15, this is what we want to see. Stop fund, break of structure. A minor break. If we get this on the M15 inside of a point of interest, then we're good to take the trade like this.
Okay.
Can you understand that? Okay, so that's it, a strong high. Yeah, that's that. Look at this one. Same exact setup, but the timing wasn't that good. So the setup wasn't that, yeah, the setup was also slow. Look at this. What is this? Stop fund, breakout structure. Strong high, right? Strong high. So on the strong high, what do we look for? High time frame point of interest. What did we have on the 4 hour? Rejection block.
Okay.
Yeah. So now, see, this is why I told you to always focus on timing. Because now, at what time? Because anyway, we know that this day, Asian high is not strong, right? No stop funds. It did give you a break, but no stop funds. So it is not a strong high. So we can expect this to get taken out. At what time? At 7 a.m. London time, or as 8 a.m. Okay, so I sold it here. This is what I was expecting. This is the time when I was expecting this to happen. Stop loss above this high right here, 4.8 pips, and I'm targeting the Asian low. Okay, this is what I was expecting. See, now you will see why I told you to focus on timing. Okay, see now, I want this to happen at London kill zone or London open, because then at that, like that is the time when the most of the time, that's like I told you, that's the time when the high or the low of the day gets set. Okay, but most importantly, if you manage to get a setup at that time of the day, you're in and out of the market very quickly, because like it's frustrating, right? Like once you pull the trigger, like until you like if to keep on looking at the charts until it runs into your profits. Okay, you know
Yeah.
how frustrating that is. But you
Mhm.
saw the previous, yeah, you saw this one, right? What happened? Like quickly it came into right into the Asian low. Okay, so that is why we focus on London Open a lot. Okay, that way like we can stay out of a lot of stress. Now look what happened here. Timing wasn't that good. London Open, there we go. London opens, so 11:30 a.m. my time. That is when London kill zone opens. 12:30 p.m. my time. That is when the London session opens. Now look at this. London has opened, but failed to tap into the point of interest. Okay, so now ask yourself, when you have an unmitigated zone in here, would you try to look for cells from somewhere around here and on a random 30 meters, something like that? No, right? We will have to wait for that to get taken out anyway. Okay, we'll have to wait for that to get taken out. Now look what happened. Not yet. Created equal highs, more liquidity below it. Can you see that? More liquidity below the point of interest, equal highs, and then there it goes finally. Taps right into the point of interest, and there comes the drop. But look how long it took though. Why? Because timing wasn't that good. So if you took this trade, you'll have to wait for 11 hours until it turns into your targets. But if you manage to get a trade during London Open, you saw that, right? Like the next one, look at this. Look how quick it ran into your targets. You sell it here, you sell it here, you pay yourself at the Asian low, and within 1 hour and 30 minutes, you're done for the day. Okay,
Mm.
you're done for the day now. These were actually the reason I wouldn't have gotten this if it was not, if it didn't happen in here, because this happened in a very crucial area. Let's talk about that later. So for this, Your final targets are, your second target is here, external range of the 4-hour, and your final target is all the way down here. That's the only reason I wanted to take this trade, even though the timing was wrong. Okay, but yeah, like I'll tell you why this is our target once we talk about trading ranges. Okay, so intraday to swing, I'll tell you how to swing that too. Okay, so intraday to swing. So that was that. So let's see. Yeah, look at this one. Even this day, like ignore that long wick, okay, because it was just a manipulation. If you ignore that long wick, we know that Asian low is a strong low, right?
Yeah.
Liquidity taken, and yeah, structure broken, or is this swing high is broken. So when Asia is a strong low, what do we do? We go into the higher time frames to see what our point of interest is, right? So on the 4-hour time frame, what do we have? An order block and a rejection block. Okay, so there we go. Now we have all of that marked out. Let's go into the lower time frames like this. Now what do? From one point, from the first one, what do you wait for? You wait for a reaction, right? You wait for a reaction. But if you do not get this reaction, then what do? You enter from this one directly. And what's the time when you're expecting price to get here? London kill zone, or is London open? Yeah, same exact thing. Okay, so it should be at it. This should come here at 11:30 a.m. my time, or is 12:30 p.m. Okay, because 11:30 is London kill zone and 12:30 is London session. So let's see what happened. There it comes. Okay, now I'm waiting for reactions. No reactions. See that? It's running straight through it. So now what am I doing? Buying it from the rejection block. Stop loss below the strong low, 3.4 pips. And I'm targeting these highs. Okay, so I wasn't targeting the Asian highs. Actually, I was targeting all of these swing highs. Can you see it? The swing highs, this long wicks. Okay, so we're targeting this. So what happens? There it goes. Time is good because this is the time window when we should stay active on the charts. Like I told you, there we go. At that time, price tapped right into it. 50 minutes after London kill zone, tapped right into the point of interest. And what happens? There it goes. See that? Okay, so when Asia is strong, this is what would happen. Okay, this is what would happen. It gives you a retracement and then it starts to fly. Okay, so that was that. Let's see some more. Yeah, this day I honestly missed the setup because now you could have taken a sell from above Asia. This was London kill zone, right? At see that 11:30 a.m. my time, ran above Asia, tapped into this point of interest. Wasn't the cleanest entry, but if you took a sell here, stop loss above that high, and if you targeted these equal lows, you would have had a one like a nice 1 to 5 almost. Okay, but I wasn't waiting for that. I was waiting for this liquid to get cleared out into this 4-hour rejection block that is in here, I guess. Yeah, I was waiting for this. Okay, so I was waiting for all of this liquid to get cleared out. You can see all this liquidity, right? Look at this. Equal lows. Okay, so I was waiting for this to get taken out into this one and then fly, but nah, didn't give us that. It just tapped into this one for some reason. I don't know. Okay, so that was what happened that day. And this day, this day I'll show you what happened. Okay, not a very clean entry, not a very clean entry because look at this. Asian low is what? A strong low, right? It's a strong low, right? Liquidity taken out and structure broken. Okay, liquidity taken out, structure broken. So if you go to the 4-hour, we have the order block right here. And then we have the rejection block that is in here. Okay, so we had this. Now we have two zones. What do? We wait for reaction from this and then we maybe buy it here, right? So I was waiting for a reaction, but didn't, like it did give us the reaction, tapped and fly right away. Okay, and look at the time once again, 12:15. That is 15 minutes before London open. Now I could have bought this because why? You go into lower time frames, look how it failed to tap into it. See that? Created liquidity above it. Okay, like right above it, it created some liquidity and then, yeah. But the thing is, see, like if you waited for breaks and all of that, nah, you're not getting it. You're not getting in. So you'll have to let that day go. So that was that day. But you can see how it taps into the order block or the rejection block, right? If it is strong, that is what would happen. Okay, that is what would happen. It taps into the order block or the rejection block. Okay, so that's that. Yeah, look at this one. Oh, like I told you earlier. I told you, now look at this. Asian high looks like a strong high, right? Why? Liquidity taken out. Swing low broken. So what do we have on the 4-hour time frame? We have a rejection block. Okay, but right above Asia, we have a rejection block here. Can you see that?
Mm.
Now, like I told you, like I told you in that previous example, when we have a POI right above Asia, are we going to take a direct trade out of the Asian high? No, right? We can't. So then what do? We wait for a reaction from this zone. If it does not give us a reaction, then we sell it from here directly. Okay. So now, I'm sorry. And what's the next time? What's the next thing? Timing, right? So the price should get here during London kill zone or as the London session. Okay. So this is when price should get here. So let's see. There we go. Time is good. 11:30. No reaction. Can you see that? No reaction from the zone. So do we enter? No. Okay, we did not get the reaction we need. Then we do not enter. But from here, now time is good. It has done a manipulation of Asia. Now we can sell it. Stop loss above the rejection block. Okay, so you have around 2 point. Yeah, I had around 2.8 pips with spreads. And then we target the Asian low. Okay, we target the Asian low. What happens? There it goes. Right at 12:30. Okay, that is 8 a.m. London time. There we go. Okay, a manipulation of Asia. And then comes the drop. See that? Right into the targets. Now, you can see the consistency, right? It's the same thing. Okay, it's the
Yeah.
same thing again and again and again. And for this one, this day we had NFP coming, if I'm not wrong. So my final targets were all the way down here. So I did not pay myself here until it got into these equal lows. So that was with NFP. Look what NFP did. Okay, so yeah, for this, direction matters a lot because how do we know the direction? Major breakout structure. See that? Major breakout structure bearish. So this move to the upside was only a retracement. Okay, so timing is good. Reversal times. Price has gone above Asia. Now it's dropping. Okay, so FOMC, I'm sorry, NFP is about to come. There it comes. Okay, so that's it. That's NFP. Okay, so that's that. Okay, so let me show you. Let me show you some more. Yeah, look at this one. Now you can see how Asia is a pool of liquidity, right?
Yeah.
Equal lows. So are you going to buy it in here? Are you going to call this a strong low and buy it here? No, you'll have to wait for that to get taken out. Okay, so on the H1, what did we have? Rejection block. Okay, rejection block. And what is the next thing you take into consideration? What's that? Timing, right? So this should happen during London kill zone or as London open. Okay, see, like using timing as a confluence is one of the best things you can do. Okay, so look at this. At this is the time window when we expect the trade to happen. Okay, 11:30, 12:30. So a 1 hour time window. This is when the manipulation should happen. So what happens? Okay, there it goes. Now it's 11:30. Timing is good. And there it comes. Taps, a false run in the opposite direction. Trend lines forming. Supply zones forming. Sellers are getting in. What happens? There it goes. You buy it here. You target the Asian highs. Can you see that? Same exact thing. Okay, same exact thing again and again. You understand the setup, right? Hope it's clear. Okay, yeah, same exact thing. Okay, so let's see. Yeah, look at this day. This day, of course, it was a risky one, a very risky one, because like let me show you. Because right above Asia, we had a rejection block in here.
Yeah.
Okay. But the thing is, what happened was, without tapping into that, the 50-minute created a strong high. Okay, now I was a bit skeptical about this trade because there's a 4-hour zone in here, right? How can we trust the 50-minute? Okay, but it's all about taking it. So what I did was we got the stop hunt, breakout structure on the 1 hour time frame. Yeah, the rejection block was here. It was already tapped into. Let's look into 30-minute. 30-minute rejection block was here. See that? So that could be refined into this, like this, and liquidity below it. So now since London has already played out, the next time I'll be expecting like this is what would happen. The next time when we expect a mitigation into this high is what? When? New York kill zone or New York open. Okay, so London kill zone, London open, a manipulation of this. A manipulation of this during New York kill zone or New York open. See, now for me, New York kill zone is at 4:30 p.m. Okay, so now I'm selling it. Okay, risky one. Now you know why it is risky, because we had a high time frame zone here. Stop loss goes somewhere around here for 5 pips, and then we can target the Asian low. Why are we targeting the Asian low? You might think it's a strong low. Okay, look at this liquidity.
Okay.
See that building up. Okay, so what happens? There it goes. London kill. I'm sorry, New York kill zone. Okay, this liquidity taken out, and then comes the drop. See that? Okay, so targets are what matters. Okay, not entries actually. Your targets, you have to have proper targets, because what if I just take a sell here and then close it somewhere down here? Like I'm losing a lot, right? Like not losing actually. See, I'm losing a major part of the move. So even after that, it ran up to 30 pips. Okay, so that's that. Yeah.
Do you trade on New York?
I trade New York only if I miss London. So what I normally do is, if I take a loss during London, then I'll trade gold during New York session. Okay, like not mainly GBP USD, because now for GBP USD, the major moves happen during the London session. Okay, the major moves happen during the London session. Only like sometimes New York might give you proper moves, but not all the time. Okay, not all the time. So I prefer trading GBP USD during London, gold during the New York session. Okay, because gold will be crazy during the New York session. I'll show you. Okay, I'll show you, because on gold, like I'm still having a lot of runners and stuff. I'll show you all of that later. Okay. So yeah, that's that. Now, can you understand the Asian setup? That's
Yeah, I
fine.
do.
Yeah. Okay, you understand that, right? Okay. So now the next thing is, now let's talk about trading ranges. Okay, let's talk about trading ranges. So now, yeah, if you would have known, you might know that already. So a trading range will always start from a strong high or as a strong low. Okay, it always starts from a strong high or as a strong low. So let's say we had something like this. Yeah, I'll show you. Let's just get fully into the charts after this one. Okay, so let's say we had a strong low like this. Why is this a strong low? Because liquidity taken out, minor break, and then the major break is in here. Okay, yeah, for this example's sake, let's say that this right here was our trading range. Okay, I'll tell you how to confirm the range from here to here. Now, let's say the market started falling down. Okay, so why is it coming down? Okay, why is it coming down? Remember, a pullback is always to take out the internal range liquidity. Okay, it is always to take out the internal range liquidity. So what's the internal range liquidity? The internal range liquidity will be the liquid that is resting within the range. So which means that is the swing lows. Okay, the three candle formation. The swing lows that are inside of the trading range. That is what we call the internal range liquidity. Okay, these swing lows are what we call the internal range liquidity. So it comes down, clears that out, and then it goes back up. But if it is this clean, then anyone will be making money out of the market, right? So like, because thing is, sometimes, yeah, you get this. Sometimes you get this. Sometimes even this, or sometimes this, right? So why does that happen? Why does that happen? Like, how do we know where it's getting into? Okay, no one knows where it is exactly getting into. So what we do is, remember, within a lower time frame trading range, okay, within a lower time frame trading range, we always look for a higher time frame point of interest. Okay, within a lower time frame range, we always look for a higher time frame point of interest. So which means, like, it depends on the time frame you're looking at. Let's say it's a 4-hour range, then you look for POIs from above the 4-hour time frame. So it could come from the daily, weekly, or monthly. If it's a daily range, your POIs can come from the weekly and the monthly. If it's a 1-hour range, okay, it has to come from, it has to always come from above it. Okay, so now let's say this right here was a 4-hour range, and you had something like a maybe daily order block in here. Could happen, right? I'll show you examples. Let's say we had something like this. The market started retracing, got into these zones, and it turns bullish. Okay, let's say something like this happen. Now it's like this. There's always two trends in the market, right? There are always two trends in the market. What is that? The major trend and the counter trend, right? The major trend and the counter trend. How do we know what the major trend is doing? How do we know what the major trend is doing? So in order to know what the major trend is doing, we have to look into the major breakout structure. Remember, always remember, a key thing to note is that, like, breakout is the direction. Okay, breakout is always your direction. So whichever side the major breakout structure happen, that is your direction. Okay, that is your direction. So now in here, what's the major breakout structure we have? This one, right? This is the major breakout structure we have. So this move to the downside is only to clear out the sell stops. Okay, it is only to clear out the sell stops. So remember, a drop in a bullish market is a hunt for sell stops. Okay, a drop in a bullish market is just a hunt for sell stops. So we know the market is bullish. So this move to the downside is only to take out maybe this swing low. Okay, let's put that aside. But just now let's say this thing started coming down, tapped into a daily point of interest, and once again the counter trend turns bullish. Okay, now like I told you, there are two trends in the market. What is that? The major trend and the counter trend. Okay, so now the counter trend has also turned bullish. Can you see it? The counter trend has also turned bullish. Now remember, When the counter trend is meeting up with your major trend, we call it the range expansion. Okay, we call it the range expansion. When both the trends are doing the same thing, we call it the range expansion. Now you're not going to think, oh, there's still some liquidity here, or still some liquidity here, and you're not going to just look for a sell from somewhere around here. No. Why? Because the range expansion has begun, so the next target will be the external range liquidity. Okay, external range liquidity. So remember, always within these lower time frame ranges, you have to look for the higher time frame POIs. Only that way you will know where price might reverse from. Okay, we're not very sure like if it is going to reverse from here or here. So the best thing to do is just have those zones marked out. Okay, the zones of interest. That is why they call them a point of interest. We have them marked out. If it gives you the reaction, then you buy it. Okay, so I'll show you. Like we're only gonna go with the trend itself. Okay, we're not gonna do a lot of counter trend trading because it is risky. We will be going with the trend itself most of the time. Okay, so this is why sometimes you only get these shallow retracements. Can you understand that? Okay,
Yeah.
so like this move could even happen in a premium price of this range. Okay, this could even happen in a premium price of the range. It doesn't have to, like it's those days, like I thought, yeah, it must get into discounted prices, but nah, it doesn't have to get into discounted prices all the time. This could even happen in a premium price and then fly. Okay, so yeah, I'm pretty sure you would have seen stuff like that happen. Okay, so yeah, that's that. And
I
then
have a
how do we
question.
yeah, what's that?
Um, okay. What, go on and tell me how to confirm the range. Then I ask the question about the
Yeah,
zone.
I'll tell you.
Okay.
Okay. So let's say price started falling down, got into maybe a discounted price and it turns bullish. Now remember, as soon as it turns bullish, okay, as soon as it turns bullish, you can't say this is the low of the next trading range. No, that's wrong. Okay, so it's like in simple terms, a higher low is not confirmed until it creates a new higher high, right? So same thing in here.
Yeah.
This low will only be confirmed as the low of the next trading range once it breaks out of the previous range.
Okay.
Okay, so once you get a break out of the previous range, like this, then we can confirm that, there we go. This is the low of the next trading range. Okay, that will be the low of the next trading range. Okay, the low is confirmed. But how do we know the high is confirmed? The counter trend has to turn bearish. But now what do we know? The major trend is bullish, but the counter trend is bearish. So which means it is not the range expansion, right? If it's not the expansion, it is the corrective move, or it is the pullback, right? It is the pullback. So yeah, now it might get into some of these areas, and once it turns bullish, now are you going to say, oh, stop on breakout structure strong high, let's sell this? No. Okay, the major breakout structure is bullish, counter trend is bullish, so now you're not going to look into strong highs, you're going to look into strong lows. Stop on breakout structure, you can expect a retracement and then buy once again. Okay, so this is what we'll be doing. And the next thing is, now you might be wondering, okay, on which time frame should I wait for the break, right? So now it's like this. It depends on the time frame that you're looking at. Now, if this is a 4-hour range, you're not going to go to the 50-minute and then wait for the 50-minute to turn bearish. Okay, no, you might get this formation in here. You might get it here. You might get it here. No, that will leave you confused. Remember, this break has to happen on the same time frame itself. Okay, it has to happen on the same time frame itself, because like I told you, we're not going to wait for these huge structural points to break. We're only waiting for a 3-candle formation to break. Okay, we're just waiting for this 3 candles to break. That is what we're waiting for. A swing low that created a higher high. If that breaks, we have the confirmation of the trading range. Can you understand? So this is how we confirm a range. Okay, this is how we confirm a range. I'll show you examples later. So is that clear? Let me know. Yeah. And
That's
what was your
right.
question?
That's right. So my question is, you talked about the zone, the premium and discount zone. So let's
Yeah.
say we have a 4 hours range confirmed already, and
Okay.
inside a 4 hour range we have a 1 hour range, and
Okay.
in that 1 hour range, price according to the 1 hour range, the price is at discount, but in the 4 hour
Okay.
range, the price is at premium.
Okay.
What do we do in that instance?
Like you mean like when like so on the 4-hour range, price is at a premium, but on the
Yes.
1 hour it is at a discount, something like that.
Yes, something like that. Yes.
Yeah. So now the main thing to do is now with this breakout structure, okay, with this bearish breakout structure, we know that, okay, now let me show you. With this bearish breakout structure, we know that now the pullback has already begun, right? Of this trading range, the retracement has started. So once we get this break, now we can drop into lower time frames. Let's say on the 1 hour, we can mark out a range like this, top one, breakout structure, strong high. And now look at this. We have a range like this.
Yeah.
Can you understand it? We have a range like this now. So now once again, we can look for cells. from the 1 hour range, a premium price of the 1 hour range. Okay, so now the thing is, now let's say this thing also came down. Let's say it started coming down and it turns bullish right here. Let's say the counter trend turns bullish right here. Now are you going to say, oh, a strong high once again, a strong high on the 1 hour, breakout structure, internal range liquid, and are you going to look for sales in here?
Yeah.
No. Why? Because major breakout structure bullish, counter trend bullish, it's going to move out now.
Yeah.
Can you understand that? Okay, so this break right here, these breaks are what matters, not these minor breaks. Okay, not these minor breaks. This right here, this is what matters all the time, all the time. Okay, if you manage to get this one properly, if you manage to look at this one, it's very simple. Okay, I'll show you. If you manage to get look at this break, if you manage to mark out this break properly, you're always in the right side of the direction, because then you will know when the major breakout structure is bullish, the only reason they're coming down is to take out some internal range liquidity. And as soon as this counter trend turns bullish right here, you know that you're not going to look for sales anymore. Instead, with every single pullback, it's going to be an opportunity for you to buy. You buy it here. You buy it here. Okay, instead, you're not going to just look for sales in here. No, because why? This is bullish. This is bullish. You're going to keep on buying it. Keep on buying it. Can you understand that? Okay, hope that answered. Yeah?
Yeah,
Hope that is clear. Okay. Okay, so that's that. Now I'll show you examples. Okay, I'll show you examples next. And let me delete this. So same thing in the opposite way. Okay, so what is this? What's the major breakout structure we have in here? Bearish, right? So the major breakout structure is bearish. So yeah, let me delete this. The major breakout structure we have is bearish. So every single move to the upside is what? It is only to take out internal range liquidity, right? Or internal range liquidity. And once it turns bearish, you know that the major trend is bearish. Counter trend is also bearish. So what is this? It's the range expansion, right? So then you might get this. And as soon as we get the body closing below the previous range's low, then we know that this right here will be the high of the next trading range.
Sorry,
Can you understand?
sorry, I'm
Yeah.
cutting you short here.
Yeah, no problem.
What if we have a weak break on a daily,
Okay.
but
Yeah,
on
yeah, I'll show you. Okay, now sometimes on the daily, we might only have weak breaks. Okay, we might only have weak breaks. But on the 4 hour, you might have full body closing.
body close?
Okay,
Yeah.
you might have full body closing, and then you might be confused, right? You might be confused. But remember, like times like that, like now, if you're just gonna wait for the daily to once again like do all the stuff, then you will miss a lot of trades. Okay, now even the 4 hour is a higher time frame, right? So we can just go along with the 4 hour strong highs. Okay, we can just go along with the 4 hour trading range if the daily isn't clear. Okay, like once we go into the top down analysis, it will clear a lot of questions for you. Okay, I'll show you around to top down analysis, so then that way you will understand. Okay, I'll show you, because like if one time frame isn't clear, we're not going to panic. We're not going to stay on that time frame. We're going to drop one time frame lower and then go along with that, because anyway our context will be based on the higher time frame direction. Okay, so we will always, like most of the time, we will be on the right side of the market. Okay, the only reason we get stopped out is because our stop losses are too big. Okay, other than that, I'm sorry, the stop losses are too tight. Okay, other than that, we will always be on the right side of the market. Okay, because of these breaks. So I'll show you how important the ranges are. Okay, so yeah, that's that. So this will turn into a strong high as soon as you get a body closing below that low. Okay, as soon as you get a body closing below that low, this will be the high of the next range. So how do we know the high has created the low of the range? Once again, the counter trend has to turn bullish. Okay, once the counter trend turns bullish, this will be your range. Okay, this will be your range. So then why are they going up? That is to take out internal range liquidity. But we're not very sure how far up it's gonna go. So now until then, what are we gonna do? Until then, what are we gonna do? Let's say this was a daily range from here to here. Are you gonna wait until it goes all the way up here and then breaks? No, it might take ages, right? So you go to lower time frames, you mark out ranges from here to here, buy it. Buy it. Okay, so we can also buy it. I'll show that. I'll show how you can do that later. So then let's say this thing started going up, did this. Once you get this break, are you gonna say, oh, a strong low? This is the low of the range, this is the high of the range. Let's buy it here. No, right? You're not gonna buy it. Why? Because the major breakout structure is bearish, counter trend is bearish. So instead of buying it, you're gonna look for sell setups from here to here. You can mark out lower time frame ranges and then sell it. Okay, with every single move to the upside, you're gonna stack up some sells. Okay, you're gonna stack up some sell entries. That is what we are going to do. Okay, so this is how we confirm trading ranges. Can you understand? Hope that's clear. Yeah. So now let's get into the charts. Okay, now You can see your questions, a lot of them. Okay, so now look at this. This was very clean. Let's say in here. What did I tell you? What's the first thing we should? Yeah. Now this is not a top-down analysis. I'm only showing you. Only going to show you like examples of ranges. Okay. So now what did I tell you? To always focus on the major break of structure, right? Can you see how they're breaking down? Major breaks. Can you see it? Those are the major breaks you have, right? Look at this: lower lows, lower highs. Those are the major breaks we have. So which means the market is still bearish. So every single move to the upside is only a retracement, right? Take out internal range liquid. Now look at this. Where did this stop? Strong high. Stop fund. Break of minor structure. Break of major structure. Strong high, which means that is the high of the range. How do we know the high has created the low of the range? Bullish breakout. Can you see it? Bullish breakout structure. So what's your range from here to here? So what, like I told you, once a strong high is created or is within a lower time frame range, what do we look for? Higher time frame point of interest. So on the strong high, what do we look for? Higher time frame point of interest. What did we have? Rejection block. Okay, look at this. This is how we can like frame our setups along with the higher time frame context. Okay, now look at this. Now it has gone inside of this. Okay, now it's a daily range, weekly point of interest, tapped into it. Now we can get a confirmation from the 4-hour one time frame low. Okay, so let's see. This right here is the low of the range. This is the bullish break that confirmed the range. Major breakout structure. This is the minor breakout structure. This was the stop fund. Okay, now look at this. What happened? Price has sorry, reached the weekly point of interest. And then what did you get? A stop hunt and another breakout structure. Can you see it?
Yeah.
Stop hunt and a breakout structure. So now what do we know? The major breakout structure is bearish. Counter trend has also turned bearish after tapping into the weekly zone.
Yeah.
So are we going to look for buy setups anymore? No, right? Yeah, we can. We can do intraday buys, but mainly we will be focusing on sell setups, right? So give me a second. Give me a second. So, yeah. So now on the strong high, what do we look for? Once again, on the 4-hour strong high, once again, we look for a higher time frame point of interest, right? Same exact thing. What did we have on the daily? Rejection block. See that? Another rejection block on the 4-hour strong high, daily rejection block, and then we have the liquidity below it. Okay, there we go. Now this, like, remember, we're working with the higher time frames. Okay, now I even took losses in here too, because in hindsight everything is clear, but when you're looking at it in real time, you will have some doubts for sure. Okay, so yeah, even I took this to be a strong high. Stop fund, breakout structure, strong high, liquidity, and then look for a sell from here, and news just wicked me out. Okay, I'll show you. And then there we go. Okay, so we have another range, not yet. See, let me show you what news did. There we go. Okay, that was news. I was looking for a sell from somewhere around here. And you can see what happened, right? Like it just wicked me out of my trade. Okay, so that happened, but that's okay. Now, are we going to look for buys just because of this explosive move? Are we going to look for buys? No, inducements. See that? Like everyone is trying to buy this. Imagine how many people are hyped up. They'll think, okay, Q is going to fly up. It's going to fly up. No. Now we get a bullish breakout structure. Okay, we get the confirmation of this range.
Yeah.
Okay. Yeah. Now price has once again. Now price is once again entering our zone of interest. Now let's go to a lower time frame. Why? What are we doing on the lower time frame? We're gonna see if the daily point of interest is gonna hold. Okay, because we can't just take trades out of the daily POIs directly, right? Yeah, we can, but not all the time. Because why? Now for this setup, of course, timing wasn't that good. Okay, timing wasn't that good. Now look what happened. Came right inside of the daily point of interest, and now we're waiting for reactions. What's the reaction? What's the reaction we want to see? A breakout structure, right? So let's see. Yeah. Okay, and there we go. A strong high created. Stop fund, breakout structure. See that? Now, are we going to focus on buys from these areas? Are we going to focus on buys from these areas? No, right?
No.
We're only focusing on sells. Why? Because ignore this break. That was only to confirm the range. We know that the major breakout structure on the daily is bearish, 4-hour is bearish. So this move was only a grab of this liquidity. Okay, they only went up to clear out that liquid. So now, what's the next thing we do? Now we can use the Asian setup because the market is bearish. We can look for a POI from above Asia and then look for sells. What did we have on the, see this 30-minute strong high inside of the 4-hour strong high? What did we have on the higher time frame once again on this strong high? Rejection block.
Projection block, yeah.
Yeah. Okay, so yeah, I already showed you this setup. Let's see. Now we can set it. Stop loss can go above these highs, 4.5 pips. First target is Asia. So I showed you how it missed it. Let me play price. Didn't get here by London, but got here by New York, late New York. And it comes there. Okay, there it comes. So now remember, like we are not necessarily swing trading. Okay, only if it is in a good place to swing, we swing it. Okay, not all the time, not all the time. So now look at this. We had a range from here to here, internal grabbed, and then you play yourself at external range liquidity in here.
Yeah.
Can you understand that? Okay, you're only taking partials. Why? Then you leave a runner all the way down into this low. Why are we doing that? Okay, major break of structure, bearish, counter trend bearish, expansion of this range.
Yeah.
Can you understand that? Okay, so that is what we're doing. Same exact thing, same exact thing. What do we do the next day? Once again, major break of structure, bearish, Asian high. I showed you how we had a daily rejection block right here that could be refined into the 1 hour imbalance that is in here. Once again, you can sell it, expecting price to get here by London kill zone. Now we're putting everything together. First target will be Asian low. So we had something like a 5 pip stop loss. What happens? There it goes. And it comes down. Pay yourself. And then what do? Leave a runner.
Well,
Can you understand that? Pay
yeah.
yourself and then you leave a runner. Why? Major breakout structure bearish, counter trend bearish. It's going to come down. See, like, are we focusing on buys in here? Who cares, right? Who cares about any buys? Because do we have any bullish breakouts? No. Okay, the whole thing is bearish. So see now the higher time frames are what matters. Okay, so there it comes. There it comes down. Look at the drop. Okay, look at the drop. So that's the thing. Most people are trapped with these moves. Oh, look at the bullish momentum. Now buyers are in this market. Let's buy this and all that stuff. They're getting stopped out. Okay, so we are only focusing on sales. So for this day, that same thing was what I was expecting. Stop fund, breakout structure, and then I was expecting London to do this, but it didn't do that. It just started dropping. Oh, I took another one. Look at this. This is why I told you paying yourself is very important. Okay, I don't think it was this day. See, this is why I told you this day. I showed you right how I got a break even in here. I sold it here.
Yeah.
This is what I was expecting this day. Okay, why? Because it was so close to the external range liquidity, and I wasn't expecting anything to come from here. I wasn't expecting a buy from here, but it happened. For some reason, it started going up, break even. Okay, no problem, no problem. Remember, even though you get these bullish breaks, still are you going to buy from here? No, remember, this is also another stop. They're once again, they're running to take out some buy stops only. Because why? We can't change this break, right? We can't change this major break and then this major break, right? It already happened. Okay, it already happened. So which means every move to the upside is only a hunt for buy stops only, just to take out liquidity. Okay, so now like I showed you, once again, yeah, break even this day. Next day, what do? We wait for Asia to end. I already showed you. We had a daily rejection block above Asia right here. That could be refined into the 4-hour rejection block that is in here. And then what's the next thing we take into consideration? Timing, right? So price should get here by London kill zone or is London open. Stop loss goes here above the rejection block. And then we target external range liquidity. First target is Asia all the time. Okay, remember that very well. And also, this is another strong high. Look at this, another, like something like a little mini range. I don't know if you call it. Stop font, breakout structure. Okay, break to the upside.
Yeah.
Confirmation of the range from here to here. Why are they going up? That is to clear out the internal range liquidity. Look at that swing high. Okay, and the higher time frame point of interest. So what happens? There it goes. Taps, and you're done. Okay, so that's your intraday profits. Okay, that's your intraday profits from the Asian low. And then what do? Leave the rest into the external range liquidity of this range, maybe from here to here, or is all the way down here. Okay, you get it, right? That is what we're going to do. So what happens? What happens? There comes the drop. See that? There comes the drop. And look at this day. Okay, this day, see, this is why I told you to always pay yourself at some point. Okay, that is what's going to determine if you're going to be profitable or not. What did Asia do? Asia created a strong high. Liquidity taken, structure broken. Can you see that? Asia created a strong high. So on the 4-hour time frame, we got an order block and a rejection block. Okay, so then what I did was sold it here with London kill zone, stop loss above both the POIs. And now since we're so close to the external range liquidity, my first target was the external range liquidity, 46 pips. Can you understand that? Okay, it's clear, right? So that was my target. Look what happened. See that? Came down, tapped, and this was that London kill zone setup. Okay, so it tapped and it came down. So what I did was, yeah, not gonna lie though, I only removed 30% from here. Okay, removed 30% from here. But I'm glad I took the profits because what happened the next move? Break even. See that? You must always pay yourself at some point. Okay, so that is very important. Okay, that is very important. And then again, let me show you. Yeah, this thing started going up for some reason. I don't care about the buy moves because who cares, right? Picking up POIs from these areas will be very frustrating. So the best thing to do is pick up POIs from the current range itself. Okay, so let's see. And once you got a break below this low, you know that this was the break of the 4-hour range. Lower lows, lower highs, lower lows, another break. So then where are your final targets? The daily external range liquidity.
Mm.
Can you understand that? There comes your next targets. Okay, so what happens? See that? Now, did you see why it was bearish? You saw why it's bearish now, right? So, because the daily range, okay, the major range we had was still bearish. See that? So, with every single move to the upside, what do? You look for sales. Okay, you look for sales. That is all you do. That is all you do because why? Everything was based on this break.
Yeah.
Can you see that? Everything was based on that break. Now, if you did not focus on this break, see now, another person would have come up with a trading range like this. Top hunt, breakout structure, internal range liquidity, buy. What happens? Will the buy play out? No. Why will the buy play out? Because after this breakout structure, it is in line with the market direction. So which means they're going to come down into the external range liquidity.
Yeah.
Can you understand that? Okay, so very important. Okay, so the major breaks will be very, very important. Okay, so let me show you more. Okay, so that was very like, can you understand that? That was the previous week. Okay, yeah, that was the previous week, and yeah, let me delete this. So that's that. I'll show you some examples on gold too, and top down analysis and all of that. Look at this one. Now yeah, let me show you. Let's go to daily. Yeah. Right after you got this breakout structure, you know that, okay, the retracement has begun, right? The retracement has begun, the range confirmation. So now what are you going to do? Are you going to wait until price gets into these zones, No, right? You can buy it. How are you going to buy it? Drop into a lower time frame, mark out a bullish range. Top fund, breakout structure, strong low. What is this? Internal range liquidity. Okay, why is this internal range liquidity? Higher highs, higher lows, higher highs. What will everyone expect? High, low, high, high. So imagine how much of liquidity we have below these lows, right? Below that order block, supply zone, and all of that. So below this, what do we look for? Just because the 4-hour imbalance is very clear, are we going to use that as the point of interest? No. I told you to first check with the higher time frames. Go to the daily. What do we have below this? Order block and the breaker block in the same place. Can you see that? Okay, so then what you could do is, once again, if we play price forward, okay, yeah, ignore these wicks, use a line chart, you'll see the range confirmation. Can you see that? You have the confirmation of the range from here to here because we got the bearish
Sorry,
break.
Dara, can I see that?
Yeah?
Can I see that daily order block again? The POI.
Okay, let me show you. See that? Order block and the breaker block at the same place, the last push down before the push up. If that is confusing you, use a line chart. That is where the sell down happened before the push up.
Okay.
Can you see that? I told you, right?
Yeah.
This is where they sold it down and then pushed it back up. So from this area, they are in a drawdown now. So they have to come into here, mitigate, and then go back up. Can you understand that? Okay,
Yeah.
so there we go. Yeah, we have the point of interest. Now we can buy it. Okay, we can buy it. And what's the next thing we take into consideration? Maybe timing, right? So let's see what's going to happen. I think it happened, yeah, here. Asia, are we going to buy it here? Are we going to buy it here? No, right? Remember the higher time frames. How much of liquidity did we have here? So much. Okay, so we're not going to buy it here anyway. Patiently wait, patiently wait. So now another thing you could do is you can start looking for sells until these lows gets taken out using another 1 hour range maybe. Okay, how? Maybe let's say stop funds, breakout structure, internal range, and a sell. Okay, see, like this how you could be flexible with the ranges, but yeah, it requires a lot of hard work for you to like do that multi-time frame analysis, but let's see what's going to happen. Okay, so now what we could do is buy it, expecting a manipulation of the Asian low. You can have around a 5 pip stop loss. And where do you target? All the way up here. Because why? On the 4 hour, why are we targeting that? Because on the 4 hour time frame, look at this. The only internal range liquidity we can clearly see is this one, right? Internal range liquidity and this. So what happened? There it comes. Look at the reaction right away. Taps, clears out the pool of liquidity, daily point of interest, and there it goes. Out. Okay, so remember, this is your safest target. Okay, just because we know that it is in a run to take out this internal range liquidity of the daily, we're not very sure if it's going to get there or not, right? But
Yeah.
the only thing we know is that this is the external range liquidity of this trading range. So this will be taken out for sure. But about this, we're not very sure. Can you understand that? Once again, safe targets. Okay, safe targets. That is what matters. So then you can buy it, pay yourself, and after that you can leave a run if you want to. Only if you want. Okay, so I'm not going to stay there. That's it. It gets there, it turns bearish, then once again you start looking for sells because it is in line with the current market direction. Is that clear? Hope
Yeah.
that one is clear. Okay, yeah. We show you. Let's see some more. Let's see some more. Look at this one. Okay. See, same exact setup, but on a daily time frame. Okay, look at this one. Major break of structure. What is that? Bearish. Bearish. Can you see how they're breaking down? Okay, all these breaks are to the downside. So which means after you look at this, we got a bullish break in here. Can you see that?
Yeah.
Very clearly. Okay, we got a bullish break. So with this bullish break, are you going to start looking for buys until it takes out all of this liquidity? No. Okay, because why? We might have strong highs in here that might stop price from getting into those highs, right? So what do we have here? A strong high. Liquidity taken. Major structure broken. Strong high. Bullish break. See, that's the first bullish break we got. Low of the range. Okay, so what is this? Internal range liquidity,
Yeah.
right? That will be your internal range liquidity. So above this, what can we look for? Higher time frame POIs. What did we have on the weekly? Order blocks all the way up here. Can you see that? There it goes. Okay, there it goes. So we can knock out the daily. Now remember, like we do not know like how far up they're gonna go, like how much of internal range liquidity they're gonna take out. We do not know, right? We do not know if they're gonna take this one and then drop, or as if they're gonna take this one and then they're gonna drop. We do not know. So the best thing to do is mark out the internal range liquidity, monitor lower time frame, see if they're doing this. If the counter trend turns bearish, then you look for sells. If the counter trend turns bearish after taking this one out, then you look for sells. Okay, so that is what we're going to do. Now look what happened though. Look what happened though. Okay, now they're going up, going up. No reactions from any of these zones. Okay, so this is the final point with internal range liquidity. Can you see that? Final point with internal range liquidity. That is taken out, tapped into the weekly order block. Now we go into lower time frames to get the confirmation. Now, since this is the daily range and a weekly point of interest, can we go to the 5 minute to get a confirmation? No, right? That's wrong. Okay, so at least the 1 hour has to turn bearish. Okay, now look at this. The importance of the swing candle formation, 3 candle formation. Look what happened. Tapped into the weekly, gave you a stop fund and a breakout structure. Can you see it? Stop fund and a breakout structure. So what is this now? A strong high created within a weekly point of interest. Is that clear? Okay, but most other people will wait for this to get broken, right? But we don't care. We don't care. We don't wait for that because why? A swing low that created a higher high has been broken. So now we can drop into the lower time frames to get our maybe entries. Okay, so now, oh, we can't go to the 5 minute. Let me show you. Yeah, entry was on the 5 minute, but confirmation was from the 1 hour. Okay, let me show you. Go to the 15 minute. Look at this one. Liquidity taken, structure broken. So what is this? Strong high, right? This will be a strong high. How do you know the high has created the low of the range? You have to get a bullish breakout structure. Okay, low of the range. Why are they moving up? That is to take out the internal range liquidity. Okay, so now this will clearly get taken out, right? Why? Oh, choose the order block that broke structure. Imagine how many are trying to sell it here. Okay, so then swing high, internal range liquidity, and we're gonna do a turtle soup. So what's a turtle soup? Like you if you know ICT terms, you know what a turtle soup is. Okay, selling above old highs and buying below old lows without a point of interest. But yeah, ICT's turtle soup, of course, it has around a 15 to 30 pip stop loss. But what we do is we sell it from above that high like this, stop loss above the strong high. Can you understand that? Internal range liquidity, strong high, no point of interest, we just sell it. Or else you can even just place your sell order in here itself, right, with the liquidity, because anyway your stop loss is tighter, and then we can target external range. Okay, so let's see what happens. There it goes, taps, and it comes down. Did you see that? Okay, so now you're not going to close everything in here. Okay, you're not just going to close everything out in here. Then if you do that, what's the point of just marking out a weekly and a daily range, right? There's no point of doing it. Now, what do we know? Like what happened on the, let me go to the one now. Yeah, what happened on the daily time frame? I told you on the daily, this was the last point with internal range liquidity. This was the weekly point of interest. 1 hour has turned bearish. So now once the internal range liquidity gets taken out, where will they come next? External range liquidity. Okay, yeah. So then what do we do? Yeah, now if you can check my channel, you can see how I left full runners, like full volume into this low. Okay, full volume into this low. Why? Everything is confirmed, right? Bearish, internal range liquidity taken out, lower time frames turn bearish after tapping into these zones. Okay, so now look at this. Even though I told you full volume, it is not like a 10 standard lot size into these lows. No, then I'll be a millionaire. No, not that. Okay, so I only use the one standard in here. A one standard, because why? If I lost the trade, I'm only losing $30 with commission. Okay, but if it runs into my targets, I'm getting 5K. See that? Okay, so like you're risking nothing, right? That way you're risking nothing. So what happened? Look at the drop into the external range liquidity. Okay, so same exact setup, different time frames. Different time frames. Can you see
ask
that?
a question, Udara.
Yeah, what's it?
Yeah. So when you marked out your daily range, when you got the bullish break of structure,
yeah, in
and
here.
while you wait, while you were waiting for the internal range liquidity to be taken out, would you be looking at down to the 15 minutes for any reaction after
you can do this. Now look at this. Now after you get this bullish break, okay, after you get this bullish break, now like I told you, rather than waiting for these to get taken out, okay, because this is the daily, right? Who knows how long it's gonna get here? Okay, like are we gonna wait for months? No, we can't. So what we do is drop into lower time frame ranges. Now that we know that the daily has turned bullish to take out the internal range liquidity, now what we can do is mark out strong lows and then buy it. Stop fund, breakout structure, strong low on the 4 hour. Strong low, we got this rejection block as a point of interest. Why? Because we had liquidity above it. Can you see that? Okay, we had liquidity right above it. So you know why this is liquid, right? Because what have everyone been taught? Choose the order block that broke major structure. Imagine how many are buying it here with the stop loss below this. But for us, simply, this is liquidity. Now what you can do is wait until price gets here, wait for reaction. Let's see. See, like, can you see how we're using all the time frames? Like, we did not even do the top-down analysis yet. Okay, let's go through that later. Now look what happened. I don't even remember these days, but let's see. Okay. Let's wait until price gets inside of the zone. Okay, there comes the drop. Yeah, there it entered the zone of interest. Now what do we wait for? We wait for a bullish breakout, right? Why? Yeah, because we are currently with, like, are we going to take any cells inside of this zone? No, it's a buy zone. Okay, so why would you look for cells? So let's wait. Okay, nothing yet. Nothing yet. And there comes the buy. See that? Like, never went below the low. Never went below the strong low. Can you see that? Never went below the strong low. And then we got these bullish breakouts. There we go. Okay. Now we get the confirmation. But the thing is, now timing isn't that good. This is like, yeah, look at the time. It is like, yeah, 8 a.m. my time, 8 p.m. my time. Okay, so that is too late in the day. New York has also, like, that is 3 hours after New York, so it's too late in the day. So let's wait for next day's Asian session to end, and let's look for a setup. Asia starts at, yeah, this was December, so Asia started at 3:30 and ended at 10:30. Let me set to New York times to check. Yeah, 5 p.m. to New York midnight time. That will be Asia. Let's wait. Okay. Asia. Now, can you see what Asia has done? Okay. Asia has created a strong low. Can you see that?
Yeah.
Liquidity taken, structure broken. Not only in here, even in here, we have a little strong low on the 30-minute. Can you see that? Liquidity taken, structure broken. So now what we can do is expect a mitigation into this. Now, look how there, if I remember, I think they made some liquidity. Yeah, there we go. What are they doing? That clear inducement formation I showed you. Higher highs, higher lows, higher highs. What will everyone expect? Higher low, higher high, right? So imagine how much liquidity we have below this. And not only that, see, like these break and retest traders after this bullish engulfing candle, all of them are getting in. So what we could do is something like a turtle soup. Buy it, stop loss below the strong low. Why? Only 3.3 pips. Can you see that? Just 3.3 pips. Okay. And now what do we know? The 4-hour major breakout structure was bullish, counter trend bullish, inside of the range. I'm sorry, inside of the 4-hour point of interest. Then our final target must be all the way up here. Can you understand that? Okay, hope that's clear. Okay, so let's see now. Let's see.
Okay.
Yeah, there it goes. Inside of our zone, liquidity taken out, and then there shoots. See that? There it starts to shoot up. Okay, so then that same way you mark out ranges and then you buy it. So what happens? There it goes. There it goes. Like, can you see what they're doing? Stop on, breakout structure, strong, low, internal range, buy. Same exact setup. Okay, keep on going, and then you target the external range liquid that is all the way up here. Patiently wait, patiently wait. That is where you're going to pay yourself. And there it goes. Okay, there it goes. And then what do? Okay, you can even close out everything. There's no problem with that. You can close out everything, or else you can leave runners first into these daily highs. Maybe first you can hold it into this, maybe into this, and then into this. See that? So you can buy it, and then after the buy is done, you can sell it. Can you understand that? Okay, so buy, sell, you can do all of that, but you have to know your higher time frame direction. That's the main thing. Okay, that will be the main thing. Okay, so was that clear? Hope that was clear. Okay.
That's very clear. Thank you.
Yeah. Okay. Now let's go to gold. Okay, let me show you. Like, not the top-down analysis actually. So what we will be doing is, okay, now remember, every single new month you have to look into the monthly time frame. Okay. Every single new week, you have to look into the weekly time frame. And every single new day, you have to look into the daily time frame. Okay, so I'll tell you why I told you that. Okay, let me see. Has it tapped into the rejection block? Not yet. Okay. Now it's like this. Every single new month, you have to look into the monthly time frame. Okay, this is not just something that happened only once or twice. No, it happens all the time. Okay, let me show you. Why did I tell you that? Now remember, like, we're intraday traders, right? So who cares about the monthly time frame? We're only looking for the POIs on the monthly. Where will the next monthly candle open? In here, right?
Yeah.
This is where the next monthly candle would open. So when it opens here, what's your next point of interest? Rejection block. I'm sorry, order block. Can you see it? Order block and a rejection block. Okay, you understand that, right? Order block and a rejection block on the monthly time frame. Okay, now let's go into the lower time frame. Like, I'm not going to just directly jump from monthly to 4 hour, but for this example, let's go there. And later, once we go into the top-down analysis, I'll show you how to work with all the time frames. Okay, now look at this. Oh, another thing is, see this. Can you see what's the major breakout structure we have in here? This one, right?
Yeah.
Okay. So now what happened? If you took this as a bullish breakout structure, and if you try to buy it here, what do you think is going to happen? You'll get stopped out. Why? Major breakout structure is bearish. So this is not a bullish break. This was only a stop hunt. Can you understand that? It's very important. Okay, very important. These major breaks are very, very important. Okay, yeah, let's put that aside. When I was not going to talk about that. Now look at this. Stop hunt, breakout structure,
yeah,
strong high. So let's cut this off. And on the strong high, what's the high time frame point of interest you have? Monthly order block.
Yeah.
Can you see it? Monthly order block price level. Okay, so let's see. Now we wait for the high to create the low of the range. How do we know the low is created? Bullish breakout. See that? Bullish breakout, range confirmed. Now you have two options. What are you going to do? Are you going to wait until price gets here? Or else you can buy it using a lower time frame range. Right? You can buy it using a lower time frame range. Let's go into the lower time frames. Can even go to 15. Like I do not like directly drop into that. Okay, like I'll show you later once we do the top-down analysis.
Okay.
Now look at this. Major breakout structure bearish, and the 4-hour itself has turned bullish. So we know that it's going to head up to take out maybe some of this internal range liquidity. But look at the 50-minute. The 50-minute has a strong low now, right? Because we have this breakout structure and this stop hunt. See that? So the 50-minute has a strong low now. So let's wait for the low to create the high of the range. How do we know the high is created? We have to get a bearish breakout structure. Can you see that? A swing low, I told you, a swing low that created a higher high has to break. Once you got that break, here comes your range on the 50-minute. Can you see how flexible you can be with the ranges? Okay, you can be very flexible with the ranges. Top hunt, breakout structure, break to the downside, range confirmed. And what's the next thing we do? We use Asia, we take timing into consideration. Okay, so on gold, Asian times are a little bit different. It starts at 6 p.m. New York time and ends at New York midnight time. Same time it ends, but it starts 1 hour later. Okay, so let's see. Let's quickly check with the New York times. 6 p.m. to New York midnight time. Yeah, there we go. 6 p.m. to New York midnight time. See, that will be Asia. Okay, so now what we do is we wait for Asia to end. There we go. Okay, so let me show you the trade I took this day, but it was a little high risk setup. Let me show you why. Because this day we had FOMC coming. Okay, now look at this. A wick below Asia. Can you see the stop hunt of Asia? And look at the timing once again. 11 a.m. Right at 11 a.m. A manipulation of Asia. And boom, starts to go up. Now, what do we know? We got a bullish breakout structure. Same exact principles apply here. Okay. Major breakout structure bullish, counter trend bullish. Are you going to look for sells anymore? No, you're going to look for buys. Why? Because it's the range expansion. So now whatever trade you take for the buys, your next target will be all the way up here. Can you understand that? Now we do not know how far up it's going to go into these areas, right? We're not sure about that, but we know that this is the range from here to here. So this high will get taken out. Okay, you get that, right? So now on the strong low, what do we look for? High time frame point of interest. So on the H1, we had this beautiful rejection block. Okay, now let me show you why it was high risk, because this day we had news, FOMC, I guess. So when there is news, what I normally do is like, I don't trade New York. Okay, when there is news during the New York session, I don't trade the New York Open. I wait for news itself. Okay, I wait for news itself, because when there is news on gold, especially, like New York session is not going to give you huge moves. Okay, news is the one that's going to give you the huge move. And you don't have to fear news as long as you know the direction of the market, because news is just a catalyst. Okay, it just makes the original move quicker. That's what it does. Okay, so like, where will price head? You know that, right? To the external range liquid. So which means if you manage to get a buy from somewhere around here, it's quickly going to run up into these highs. That is all they're going to do. But if there was no news, it will be a slow move. Okay, if there is news, this is what would happen. That's it. Okay, so that's all they do with news, so you don't have to fear that. Now this is what happened. Came down inside of the rejection block and never went below the strong low though. Can you see that? Never went below the strong low that was created in here. Okay, now the reason I told you this was a risky one was because this is what I did. Okay, within the strong low, another rejection block was created, but this looks like equal lows. Can you see that? Yeah. Okay, so I was a bit skeptical about the trade because it looked like equal lows, but yeah, I bought it here. Stop loss below the strong low. Did not risk like I normally do because we had equal lows in here. Targeting the external range liquidity and news paid. Look at this. Oh. That's it. See, like, did you see, like, did we look for any unnecessary sells from here? No, right? You can't. You can't. Okay, because why? Bullish, external range liquidity. Okay, but yeah, this wasn't the setup I was going to show you. Let me show you. Let me show you the next one. Now, once again, we wait until Asia ends. Next day's Asian session. So that is from 3:30. Yeah, 3:30 to 9:30 a.m. my time. There we go, Asia. Now ask yourself, is this day, is the Asian high a strong high? No, right? Not a strong high. It created a pool of liquid. So what is it doing? Building up all of this liquidity right below the monthly point of interest. Can you see that? Right below the monthly order block that we marked out earlier. You remember that, right? Look at this. Now, what's the next thing we take into consideration? Timing, right? Timing. So this manipulation could happen during London Open, London session, or as most of the time, since this is gold, this could happen with the New York Open or New York session. Look at this. Now, for me, New York Open's at 5:30 p.m. my time. Okay, so that is, I think, 8 a.m. New York time. See? Yeah, 8 a.m. New York time. Now, I'm going to take a sell here from the monthly zone. Stop loss above the rejection blocks. See that? 20 pips. Because this is gold, you can't expect 2 to 5 pips stop losses on gold. Okay, and your first target will be the Asian low. And since it is coming from a monthly zone, where will your final target be? External range liquidity. Okay. Now remember, this is your first target. Okay, this is your first target, 280 pips. Okay, now look what happened. There we go. Right at 5:30. Can you see that? New York Open, a manipulation of Asia. Buyers are getting in. Look how the trend lines are forming. More and more buyers are getting in. Same exact setup. But what happens? There it comes. Cool. See that? You're done. You have 280 pips in 3 hours. Okay, that's the beauty of trading gold. Okay, so you pay yourself here. Now, what do you know? Major breakout structure bearish, counter trend bearish. What are you going to do? Are you going to look for buys anymore? Are you going to bother about any of these zones anymore? No, you're going to look for sells now. Okay, so you extend the targets here. So you're risking 20 pips to get 580 pips. Okay, now we have a strong high formed on the H1. How do we know it's a strong high? Liquid taken, structure broken. Now we wait for another. There we go. And look at this. Another range is created on the 1 hour from here to here after this bullish breakout. Can you see that? Okay, so that's why I told you, don't fear pullbacks. Every single move to the upside is only another opportunity. Okay, so I was looking for a sell from actually, I think it was 4 hours. Yeah, from this order block, but never got there. See that? Never got there. It just started falling for some reason. That's okay. And then look at this. Into the external range liquidity. Can you understand that? Now, did you see where the sell came from? Did you see where the sell came from? Monthly order block. Okay, now, do you think anyone will have an idea what this point of interest is? No, right? Just a random line. What a sniper entry from there. Okay, so that's the thing. Not even this rejection block. Okay, it was from a monthly point of interest. Okay, so this is how powerful the higher time frame zones are. Okay, so can you understand that example? Hope that one was clear. Okay, yeah. So that's the monthly one.
Yeah, I've got a question. What's your timing for gold?
I'm sorry?
What's your timing? No, I mean, like your timing, like if you're using timing, like is it New York or you're using London for gold?
Mainly gold will be traded during the New York session. Okay, but doesn't mean there will be no setups during London. Okay, there will be setups during London, but main trades will be happen during the New York session. Okay, main trades will be taken during the New York session. Can you understand? I hope that's clear. Okay.
Yeah.
Okay. Now look at this. So for that month, what did we have? The order block, right? Look at that. Like you can still hold it. Okay, we're still in profits. But then, so I told you about 4 different POIs, right? Order blocks, breaker blocks, rejection blocks, and then imbalance. Look at that. You have the high of the month if you manage to get it that day. You're in profits for the next 30 days then. Okay, so that's that. Then where will the next monthly candle open? In here, right? Then what's your next point of interest? Imbalance. Can you see that? You understand why that's an imbalance, right? Because the next candle opens here. So from here to here, you're going to have a gap. Okay, you're going to have a little gap. If the imbalance and the rejection block is very close to each other, then you can refine it to the rejection block itself. But yeah, right now it is not that close, right? See, 240 pips away. So you can still use the imbalance as a point of interest. And then Yeah, did a slight refinement of this, a very small refinement of this. See, this was the monthly imbalance into this one. Can you see what is that? Rejection block once again. Okay, into this 4-hour rejection block. And then we have liquidity below it. Okay, we have liquidity below it. Now look what happened. Okay, tapped. Okay, so something bad happened here. Look at the drop. Look at the drop from the monthly level. Okay, so I was a bit greedy. I did not want to take out anything. Okay, because we know that anyway, the major breakout structure is bearish. Okay, so counter trends have also turned bearish after tapping into the monthly zones. So I was thinking, okay, maybe I'm going to hold everything down into this low. So I moved it to break even, was holding full volume until this low, and then this happened. It just started going up and, well, wicked me out. Okay, stopped me out, and then it dropped from the same point. Okay, so that happened. That's okay. But did you see where the sell came from? Where did it come from? From the monthly imbalance once again. Yeah. Okay, so this is why I told you to look into the monthly every single new month. Okay, let me show you. Let me show you more. Look at that. If you are still holding it, look at the drop. Okay, that same way. Look at this one. Yeah, the recent candle. Look at the recent candle. Where will the next candle open? In here, right? This is where the next monthly candle would open. So when it opens here, what's your next point of interest? You have a breaker, you have an imbalance, and you have the rejection block. See that? Okay, now look where the current sell is coming from. Look at that. Monthly rejection block. Okay, you can see that, right? Tapped. Wow. And then, yeah, now almost 700 pips. Like I have sales from all these areas. I'll show you 800 pips down. See, that's a lot. Look at this one. Let's say you missed it. How are you going to take it? Let me show you. That's okay, because these are the high risk entries, because these are direct trades. Here comes the confirmation entry. Stop on breakout structure after tapping into that zone. Did you see that? Yeah. Even if you go to the 4-hour, there we go. And also, why are we going to take that? It tapped into a monthly zone, and also the major breakout structure is bearish. Yeah. Can you see that? Major breakout structure bearish, tapped into the monthly, 4-hour turned bearish. Then we know that most probably it's going to be the range expansion. So then we have a strong high that is formed in here. Let's go into the lower time frames to get our entries. Now on the 1-hour, a range is created from up here to down here after this bullish break. Can you see that? Yeah. Range confirmed. From here to here will be the range. Okay, so then, yeah, there comes our POIs. This and this. But the thing is, no clear liquidity below it, right? Yeah, we did have this one, but let me show you what happened. Tapped into these zones. Okay, tapped into these zones. Came down, but now ask yourself. Now, okay, look at this. Now this thing is starting to go up. Okay, this thing is starting to go up. Did this high break any, like, did it give you this formation? Did it break below any low? No, right? Yeah. So then when it is going up, are you going to look for any sells from here? No, right? It's a high that failed to create a lower low. So which means this is once again liquidity. See that? Inducements. Okay, this is once again liquidity, because it's a high that failed to create a lower low. Okay, not a strong high, it's a weak high. So above that, what can we look for? Higher time frame point of interest. So nothing on the 4-hour, which means nothing on the daily, obviously. But on the 1-hour, what did we have? Rejection block. Yeah. Okay, so what you do is you sell it when it gets here. Stop loss can even go above that, but you can't do that anyway. That is around 5 pips on gold. Can't do that. So you'll have to have at least 15 pips. Then we target external range. What happens? Okay, there it goes. Taps and boom. See that? And this is gold. Okay, now I did not take this sell because why? I got the sell from here. This was New York open. See, 5:30 p.m. my time. This happened during the Asian session. Okay, this happened during the Asian session. So I don't trade Asia. See, this is 1:30 a.m. my time. So I'm asleep at that time, and that is Asia. Okay, but that's okay. Let me show you another one. Break. Can you see the drop? So now from this day onwards, what are we going to do? With every single move to the upside, we're going to look for sells, right? So we'll be looking for sells. Now look what happened. Yet, yeah, this was Asia and all of that happened. Now look at this one. Stop hunt. Major break. Okay. Strong high. That's the high of the range. Higher time frame point of interest. Rejection block. 1 hour. Liquidity. Okay, what's the next thing we take into consideration? Timing. So we had Asia 2. So this move should happen at London Kill Zone, London Open. Or else if it didn't happen at that time, it should happen at New York Kill Zone or New York session. Okay, so stop loss can go above the strong high, 10 pips. The target will be 100 pips. Okay, intraday targets. So what happens? Patiently wait. There it goes. Taps and it comes down. See that? Same exact setup. Okay, same exact setup. Pay yourself, leave the runner. Okay, leave the runner maybe. Yeah, you can even hold it into these lows, in my opinion. Into these lows. But since you have already paid yourself, if it's going to get here or not, we don't care. But yeah, you can still hold it. You can even hold it into this liquidity. See that? Look at all that liquidity. Okay, so now you can hold it into these lows. Now, once again, we had another one, the same exact setup. Okay, let me see. Look at this one. Stop hunt, breakout structure, strong high. What do we look for on the strong high? A higher time frame point of interest, right? Now, if you go to the daily, look at this. Where will the next daily candle open? In here, right? What's your next point of interest? We have an imbalance now.
Yeah.
Yeah, see that? So we do have different POIs. Even in here, we had a rejection block. But let me show you what happened. This could be refined into, yeah, even on the 4 hour, we had a rejection block in here. Can you see that? We can refine it to that. On the H1, yeah, we had another rejection block. And look at the liquidity that is getting built right below it. See that? A high that failed to create a lower low. Liquidity. So at what time should price get into our point of interest? London Open, London Kill Zone, or else if it fails to come there at that time, then when do we expect it to come there? New York Kill Zone or New York Open, right? So stop loss can go above this, 16 pips. First target will be here, 118 pips. Okay, so what happened? Okay, didn't get here by London Kill Zone. Can you see it? It's 11:30. Then let's wait until 12:30. Didn't get there by 12:30. Then at what time do we expect price to get here? New York Kill Zone or New York Open. See, 4:30 p.m. my time. That is when New York Kill Zone opens. There it goes, right at 4:30. Okay, liquid taker, daily point of interest, and another drop. See that? Same exact setup. Okay, same exact setup. Stop fund, breakout structure, liquidity, time, yeah, high time frame, point of interest, and time. Okay, so look at the drop. Look at the drop. Okay, you can see that, right? Now look at this one. To show you. Go to the 4 hour. Once again, you can see. Now this is moving up. Are we going to take trades from anywhere around here? No, because that is the internal range liquidity actually. Because the strong high you had was here. See that? Swing high taken. Swing low broken. Okay. High of the range. Low of the range. After this bullish break. See that? Bullish break. You have the low of the range. Now price is going up. So yeah, we had a higher time frame point of interest. Let me show you what it is. Yeah, if you just check the MT4 service, you can see that, because to trade gold, of course, I don't normally use trading view. I use MT4. Okay, so what happened? This tapped right into this opening price. Can you see that? Right into that one. Okay, right into this one, because on another higher time frame, let's say maybe on a 2 weeks time frame, this might be an order block, right? Last push up before the push down. Okay, we don't know. Okay, I don't know, but yeah, opening prices, we have that one. Okay, so price tapped right into it if you check that. And once again comes the drop. Okay, once again comes the drop. So I did take sales in here. We show you the other sales I took. Stop hunt, breakout structure, strong high. Once again, if you check MT4 service, there was a point of interest in here. On the 4 hour, that was not tapped right here. So got another sell in here. Stop loss can go above that. First target will be here. Second target will be where? Final target, external range. Okay, you understand that, right? That will be our next target. Okay, and once again, another one. Once again, we got this stop hunt. Yeah. Okay, we got this breakout structure. So on the strong high, what do we have? Go to the 4 hour. Another rejection block and the order block, both at the same place, almost at the same place. And then what we could do is, see, now this was news, setting it. At a 15 pip stop loss, final target, once again, all the way down here. See, this is how you can stack your entries. There it goes. Taps, starts to fall. Can you see that? Same exact thing. Okay, same exact thing again and again and again. Okay, so yeah, once again, it has gone into, now because we had this major breakout structure, this will be your internal range liquidity. Now, I was expecting price to get into this rejection block at least, but it has tapped into the imbalance weekly. Can you see that? Okay, tapped, and now it has started to fall. Okay, so this is why I told you to look into the monthly time frame every new month. Can you understand why now? Okay, so see, if you did that, you would have gotten so many good trades. So many, see, here, 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 so you can swing it. Okay, you can swing it. So that's why we should look into the monthly time frame. You get it, right? Hope that's clear. Yeah. Now let's go and do a top-down analysis quickly. Okay, so now for me, my top-down analysis will always start from the weekly time frame. Okay, so like every single new month, you have to look into the monthly time frame. That's a different thing, but like that you'll have to only do only once a month, right? Just once a month. Okay, but the weekly, of course, you have to look at it 4 times a month. So let's see. Let me show you some examples from here. Okay, some hindsight ones, can't help it. Let's see. Okay, now remember, this is how I do the top-down analysis. This is what I always look for. Okay, on the weekly, I always look for the most recent major breakout structure. Okay, the most recent major breakout structure. Especially, I do that on the line chart. Okay, so what do we have? What's the most recent major breakout structure we have? Bearish. Look how it's falling. All these lows are getting broken. Can you see it? So the point I'm trying to tell you is, does it make any sense for you to look for long-term buys in this market? No, right? Not at all, because the market is melting. Okay, the market is still bearish. So focus on the major breakout structure, then you get the bias. Okay, so now we know that the major breakout structure we have is bearish, right? The major breakout structure we have is bearish. Okay, that is done. Once that's done, what's the next thing we look into? What did I tell you to look in on the monthly time frame? Where will the next monthly candle open? The next point of interest, right? The same thing on the weekly. Where will the next weekly candle open? In here. What's your next point of interest? Rejection block. Okay, yeah, mark that one out. Mark that one out. This is the only thing we do on the weekly. Remember that. Okay, no marking out ranges, nothing else. This is more than enough because we are intraday traders. We're not necessarily swinging this, so this is more than enough. Okay, and then we drop to the daily, one time frame at a time. So on the daily is where we mark out the ranges. Like I showed you on that bearish range on GU, you saw that, right? So now on the daily is where we mark out the trade in ranges. Now look at this. Liquidity taken out, minor structure broken, major structure broken, high of the range. How do we know the high has created the low of the range? Bullish breakout, low created. See, same exact thing, same exact thing. Now, if you look for a sell from above this, I did take sales from here. Like you can check my channel. I sold it here, sold it here. I think I got stopped out in here and then sold it once again in here. Where are our final targets? Down here. Why? Because internal taken out. After internal gets taken out, we target the external, right? So above this, what do we look for? High time frame point of interest. So you can see how it tapped right into a weekly rejection block. Can you see? I use FXCM and you can see how it tapped like to the tick right into this, and then it started to drop. Okay, then it started dropping. But yeah, now look at this. Now, since we only have this swing high within this trade-in range, this high is acting as the internal range liquidity and as well as the breakout structure point to confirm the range. Can you understand that? Because we only have one swing high. Okay, so do not confuse this to be a bullish breakout structure and try to buy it here. Why? Because the major breakout structure we have is bearish. This was only the confirmation of a range. You can understand that, right? Hope that's clear. Okay, yeah. Then this is taken out. And once you get a body closing below this low right here, then what's happened? What happens? What's the high of the next range? This one, right? That will be the high of the next trading range. Can you understand that? Okay, once you got a body closing below that low. Okay, how do we know the high has created the low of the range? We have to get a bullish breakout structure, right? Do we have that bullish breakout structure? No. Then can I mark this out as the low of the next trading range? No, right? That is wrong. So what are we going to do? Are we going to wait until they give you these bullish breaks at some point? No, we're intraday traders, right? Don't panic. Drop one time frame lower. Oh, on the daily, the next thing we do is, remember, we mark out the ranges, and then even on the daily, we look for the next point of interest. Okay, so what's the next point of interest we have on the daily now? Okay, yeah, see this 4 hour, I'm sorry, the weekly rejection block is a 4 hour, or is a daily order block here. And also we have your,
You're breaking up. I can't hear you.
sorry, what's that?
You're breaking up now. There.
Give me a second. Give me 1 second. Can you hear me?
It's not really clear. The audio is not clear.
Okay, give me.
It's still breaking up. I can't really hear.
Okay, can you hear me now?
Yeah, I can hear you now. Perfect.
Ah, okay. Yeah, my my router was just playing around. Okay. So on the daily, like I told you, now what we do is we mark out the ranges, and the next thing is like what we do on the weekly. Okay, what do? We look for the next point of interest, right? We look for the next point of interest. Now, can you see on the daily we have the next point of interest? What is that? We have an order block in here. Can you see that? Last push down before the push up. Okay, we have an order block in here. So we can even have that marked out, then drop into the 4 hour time frame. Now let's go into the 4 hours. Since the daily ranges aren't clear, let's see if we have something on the 4 hour time frame. Okay, so let's see. We have this liquidity taken out. It was the previous one's internal range liquidity. Strong high. Yeah. Now on the 4 hour, look at this. We do have a trade in range. Okay, we do have a trade in range on the 4 hour. What's that? Liquidity taken.
Yeah.
Major structure broken.
Yeah.
Right. So what is this? A strong high.
Yeah.
How do we know the high has created the low of the range? You have to get a bullish breakout structure, right? I told you a swing high that created a lower low has to break. So
Yeah.
here we get the bullish break. Can you see it? Just a one candle break. Why not one candle actually? 3 candle formation. Can you see it?
Yeah.
Lower high to the left, lower high to the right. Middle candle will be your swing low. Okay, the middle candle will be your swing low. If that break is confusing you, use the line chart. You'll see it very clearly. Okay, so there we go. Now we have a range that is from where? From here to here. Okay, now let me draw 2 horizontal rays. That way we know what our range is, what our dealing range is. Because now why did I tell you that? Once we mark out this range, anything outside of it is irrelevant, right? Who cares? Okay, now most people will think, oh, there is an imbalance in here, so selling it from here is risky. There's a huge imbalance up here, so the price is reaching there. No, it won't happen that way. Before getting into these imbalances, they have to test these highs first, right? They are strong highs. Okay, so remember, once you mark out a range, okay, once you mark out the range, like you're not going to just look for a point of interest outside of the range. Okay, not on the top of it, or else you're not going to just scroll to the left and then start picking up POIs from these areas. Who cares, right? The only thing we focus on is what's happening within the range. So remember, what's relevant is what is within the range. Okay, what's relevant is what is within the range. Okay, so now can you see what we have done? I told you within a lower time frame range, we have to always look for a higher time frame point of interest. Okay, yeah. Now, what if I did not look into the weekly? I might think strong high, why? Stop hunt and a break. Then this is my internal range liquidity, and this is my point of interest, right? And then price will reverse from somewhere around here. I have no idea why it happened. Why? Because I'm not looking into the higher time frames.
Yeah.
Okay, so don't do that. Make sure you look into the higher time frames. That way you know there is possibilities of price reversing from here, right? So then what you could do is you can even refine this into these rejection blocks. See that? Not huge refinements, just a slight refinement. But the thing is now, actually the refinement is not necessary at all, right? Because why? Like anyway, are you gonna like sell it directly when the price gets here? No, anyway, we'll be waiting for a confirmation, right? So if you refine it or not, it's completely up to you. I just refined it just to make it tidy only. Okay, so there we go. On the 4 hour, we have all of that stuff marked out. Okay, so let's go to the 1 hour. Let's see what the 1 hour has done. Same exact thing. Stop horns, major breaks, major break in here. This was the daily point of interest. Let's see what we have on the 1 hour. Yeah, look at this. We have a strong low in here. Can you see that? Yeah. Liquidity taken out. And then structure broken. So we have a strong low. So once a strong low is created, what do? We look into the higher time frames to see who cleared out this liquidity, right? Like, let's check the 30-minute quickly. Yeah, on the 30-minute, we can clearly see how it is a strong low because equal lows are taken out. See that? Equal lows taken out, structure broken. Let's check the 4-hour time frame to see what our point of interest is on the strong low. Yeah, there we go. Rejection block. Can you see it? We have a rejection block on the 4-hour that swept the liquidity. So that'll be a nice point of interest. Okay. So we have all of that stuff marked out. We have a strong low here. And then, yeah, now let's wait for Asia to end, all of that stuff. And then let's look for an entry with London maybe. Okay. So this was 15th of November. Yeah. So those days there was no daylight savings time. So London opened at 3:30. I'm sorry, Asia opened at 3:30 a.m. and ended at 10:30. Let's quickly check it with the New York Times. Yeah, 5 p.m. to New York midnight time. Okay, so that will be Asia. Let's wait for Asia to end. Let's look for a setup. There we go. Asia is now over. Okay, sorry. Asia is now over.
Yeah. Sorry, Udara. How many pips? Yeah. How many pips did Asia do for this one?
Let's see. Yeah, only 28 pips. See that? Only 28 pips. Okay. So we have that marked out. Now let's start marking out ranges and all of that. Let's see what price is doing. Let's get back to the H1 because there's not a lot of things to do on the higher time frames when we are intraday traders. We have already done what is needed to be done. Okay, so let's see. Now the 1 hour time frame, we have a strong low created here. See that? Liquidity taken from a swing low, swing high broken. Can you see that? Stop fund breakout structure, strong low. Asian low is the inducement into the strong low. So on the 1 hour strong low, what's the higher time frame point of interest? The daily order block. Can you remember that? Yeah. There we go. And what's the next thing we take into consideration? Timing, right? So those days, London opened at 1:30 a.m. my time, 1:30 p.m. my time. Okay, so right now it's 12:30, but when there is no daylight savings time, it's at 1:30 p.m. Okay, so stop loss can go below the strong low, and we target the highs that are getting formed here. See, if I set it to London time, 8 a.m. London time. See that? So now we can expect a manipulation. So what happens? There comes the drop. Now with this, a new range gets created, right? With this bearish break, a new range gets created from here to here. Can you understand it? Top one, breakout structure, strong low, internal range liquidity, break to the downside, confirming the range, then we can expect this. Okay, so what happens? What happens? Let me mark out the high of the range. Okay, and there it comes. Right at 8 a.m. Did you see that? Now, like I remember, in here, there were no POIs even on the 1 minute time frame because it was only a long wick. See that? Long wick. Then if you didn't look into the higher time frames, how would you know what your point of interest is, right? No one will have an idea. Like most people are assuming that I use the 5-second time frame or something like that. No, like should we use the seconds time frame? No. Refinements has to be done on the higher time frame, okay, not the lower time frame. So there it comes, right at 1:30. Okay, taps, clears out the pool of liquidity, Asian low, and then it goes. That's it. Can you understand the setup? Intraday. Okay, only intraday setups. Remember, because are we in a good position to swing right now? No, right? Not a good position to swing right now because why? Range is here. Range is bearish. Can we take a buy and expect it to last long into these areas? No. Okay, so intraday only. These are intraday only. So know what trades you can hold and what trades you cannot hold. Okay, so this is not a trade that you can hold long time for a long time. So this is only an intraday setup. Pay yourself, pay out. Okay, stay out because this is more than enough, right? This is more than enough now. Yeah, now this of course this was like 1 year ago. So I like I was a bit greedy those days. So I even took a sell in here. Took a sell in here after the manipulation of Asia and then targeted the Asian lows, a little bit of ping pong that day. Okay, so same exact setup, you'll see that, but unfortunately we can't go to the 5-minute time frame because this was November. But it's the same thing. Top front of Asia. Can you see that? Wick above Asia. Okay, and then on a lower time frame, we got a breakout structure. Who cleared out the liquidity? Rejection block. So what I did was sold it here. And the next thing was timing. See, right at 12:30, right at London kill zone was when it mitigated this rejection block. Stop loss was above the strong high, and this was the target. A little ping pong that day. Can you understand that? Okay, so that is what you could do when, yeah, when the when everything is clear. Okay, so once you get this, you're done. What do? You wait for next day's Asian session to end, and you look for another setup. Okay, because One setup a day, one high probability setup a day with all of our confluences. That is how we want to see. Okay, so now let's wait. Let's wait. Okay, there we go. Once again, Asia. Let's wait for Asia to end. Okay, how do we start every single new day? With the daily time frame, right? Let's go to the daily. Remember, okay, now make it a rule. Okay, make it something like a checklist. Make sure you always check the daily time frame every single new day. Now for this day, do we have any bullish POIs? No, right? The next candle opens here. It has already tapped into this. This is the strong low, so no POIs on the daily. We're clear to go. Let's go to the 4-hour. On the 4-hour, of course, yeah, on the 4-hour, we'll have to wait. Like to use the 4-hour, we'll have to wait until Asia ends, right? To see if Asia is strong or not. Can you understand that? Okay, so let's wait. Yeah, let's wait. But on the 1-hour, yeah, on the 1-hour, we can mark out a range. Why? Asian low taken out, structure broken. So what is this? A strong low. How do we know the low has created the high of the range? Bearish breakout structure. High created. So why would they have come down? That is to take out the internal range liquidity. Can you understand that? Swing low. That will be the internal range liquidity that is taken out. Let's see what they're doing. Let's wait for Asia to end. Okay, there we go. Now, can you see what they have done? They have cleared out the internal range liquidity, and they have once again turned bullish in here. If you use a line chart, you can see that very clearly. Can you see that? So now what we know is the range we had was bullish. This counter trend has also turned bullish, so which means they're gonna move out to take out the external range liquidity, right? Internal taken out. Next, they'll go for external range. Now, look at this. These are the days when that setup will fail. Let me show you like what setup. There you go. Yeah, I have OCD. Sorry for that. I have to make the line straight all the time. Okay. Now, these are the days when this Asian setup, this is gonna fail. Why? Now, what if this day you think, oh, Asia is not strong. Let me sell it from here. Like this. Let's say with a 5 pip stop loss. Do you think this one will play out? No, right? Why? Because the range we have is bullish from here to here. Okay, so which means now they're going to go out into to take out the external range liquid. This is where that magnet is.
Yeah.
Can you understand that? So you can't sell it here now. Okay, so you only have two options, right? If you're not going to sell it, you can buy it. So now you know Asia is strong. So what's created on the 4-hour? Rejection block. Okay, so we have a rejection block that is created on the 4-hour time frame. That is right here. Now the next thing we take into consideration is timing. You can wait until London kill zone or London Open gets here, 12:30, or else 1:30. Oh, yeah, look what happened. Right at 12:30. Didn't tap into this point of interest, started flying. See, this is why I told you to always focus on this on London kill zone and London Open. So imagine, like, let's just assume you were on a buy from somewhere out here. Okay, as soon as London opened, boom, you're done for the day with 28 pips. See that? Because it always gives you that momentum. Okay, but we did not play that. We missed it. So let's wait and see, because where did this tapped into? Yeah, this tapped right into this 1-hour imbalance. Can you see it? Tapped right into a 1-hour imbalance before going up. But yeah, just because it tapped here, I'm not going to tell you these 1-hour imbalances are stronger than 4 hours or anything like that. Okay, so just tapped here. I don't know why it just went. Okay, so let's wait. Let's wait. Now, once you get a body closing above these heights, okay, once you get a body closing above that high, then what do we know? Then, yeah, this will turn into the low of the next range, right? This will turn into the low of the next range. But if we consider this to be the low of the next range, what are we failing to see? Liquidity. Yeah. So now, if we try to look for a buy from here, are we the only ones doing it? No, right? Everyone else is doing that too with their stop loss below these lows. Okay, so which means, now can you see how this liquidity is being fed into our 4-hour zone, the one that we marked out earlier, the 4-hour rejection block. Okay, so now if it comes down, like I honestly don't care if it like gets into these areas and then flies like this, because it's not about getting in on every single move in the market, right? It's about getting on the high quality one. So if you try to take a buy from here, liquidity, strong low, buy, do you think it's a safe one? No, right? Not safe at all. Okay, not safe at all. So I'd rather wait. Okay, so now I saw this liquidity this day. Okay, I saw this liquidity and I thought, okay, maybe once it turns bearish like this, I can sell this until that liquidity gets taken out, right? This is what I thought. And then this is something dumb. This day I took a loss because on the 5 minute, we did get this formation. Stop fund breakout structure. And this formation happened right at London Open. So what I did was I tried to sell it from somewhere around here, and then like something like this happened and wicked me out. Okay, we can't go to the 5 minutes, so I can't show you that. But yeah, somewhere around here, I think somewhere around here, I tried to sell it and they stopped me out. Okay, so that is why you can see how messy the lower time frames are, right? The 5 minute and the 1 minute, it's crazy. Okay, it'll give you all these all of those noise. Okay, so then I thought, now since I got stopped out during London, I'm gonna wait for New York now. Okay, so let's see what New York has to offer. Okay, yeah, now very clearly the 50-minute has turned bearish. Can you see that? Yeah, break in here, stop hunt in here. So which means now a strong high has been created. Yeah, even this setup was based on the 5 minute, but I'll show it to you using a line chart on the 50 minutes. So now after this bearish break, of course, now anyway, we know that the next buy zone will be all the way down here, right? Because this is like very clear, obvious liquidity. You can see that, right? Very clear liquidity. Okay, that is very clear liquidity. So we'll have to wait now. So now I'm on the 5 minute, waiting for another range. Look at this. High is created. How do we know the high has created the low of the range? We have to get a bullish breakout, right? So if you use a line chart, you can see the bullish breakout very clearly. Can you see it? Breakout right here. Okay, yeah, like unfortunately, we can't go to the 5 minute. That's why I'm showing it to you on the line chart. There we go. Then this is our range. Can you understand that? Yeah. And then this long wick right here was the what? Internal range liquidity. Okay, on the 5 minute is the internal range liquidity. So above that, what do we look for? High time frame point of interest. And very clearly we had an order block. Okay, so what I did was sold it, targeting the external range liquidity of this range, stop loss above all of these. Why am I placing my stop loss above all of these? Because on the higher time frames, we still had some POIs in here. Can you see that? Now this could also be a POI, but like I'm not gonna have a stop loss this week. Like I'd rather get stopped out with this and enter once again, like without doing this. Okay, so that's too big for me. So this is what I'm doing. Okay, so even if it gets into these areas, I'm still safe, right? I'm still safe. So let's see what's gonna happen now. Okay, not yet. Now New York has already opened. Okay, New York has opened, so price has not tapped into this yet. Now can you see what they're doing? A very solid confirmation price wants to come low. Was that creating equal lows? Can you see it? They created some equal lows, so which means the market wants to come down lower now. Okay, so that is why they left it behind. Okay, so there we go. And then what happens? Boom. Did you see it? Look at the precision. Taps and you're out. Okay, so this is all you do. Like just take out everything in here, because are we in a good place to swing right now? Not yet, right? Not yet. The higher time frame zones are here. Yeah.
So I have a question. The time you realized that you had two POIs, why didn't you wait for a reaction? Why did you just
because now anyway, see that my stop loss is only 5 pips, right? Stop loss is only 5 pips, so that's like the minimum I'm gonna have anyway. Okay, so if I can place it above all the POIs safely, then I'll be able to take a direct entry.
Okay.
That's it. Okay, yeah, you get it, right? I hope it's clear.
Yes.
Okay, now if it was around, like, let's say from here to here it is around 10 pips, now then I'll like anyway wait for breakout structure from either one of those zones. Okay, but this was only 5 pips above 2 POIs. So even if it taps into those zones, I'm still safe, because it's not about the sniper entries, right? It's about getting in on the trade. That is how you make the money. Okay, not the sniper entries. Okay, yeah. And then now, yeah, you can even leave a runner from this into the liquidity that is down here. But no, I did not do this honestly, because now in hindsight, since I know it happened, I can show you to leave it here. But when you're looking at it in real time, you'll think like, what if it gets here or not, right? Like, we don't know. Okay, but yeah, now I know it got here in hindsight. But yeah, your first target must be here, external range, because this was the range, entering at internal range, exiting at external range liquidity.
Okay.
Yeah, like, can you see how important the ranges are? Okay, so it's very important. Okay, very like market structure, ranges are nothing new. It is this market structure, but you only focus on the valid structural point, the relevant structural points. Okay, so yeah, let's see now. Once again, once you get this, you're done. You wait for next days Asian session to end. So let's see. Okay, there we go. Runs into Asia. Oh, look what happens during Asia. Can you see that? Cleared out this pool of liquidity. Okay, tapped right into the 4-hour rejection block. But the thing is, it happened during Asia, right? So are we gonna take the buy? No, we don't trade Asia. Like you can trade Asia, but I don't trade Asia. That's like a rule for me. Okay, I don't trade Asia because those days I used to trade Asia, and as soon as London opens, it stops me out. Okay, so that is why I only focus on the London Open setup now. So that way I'm not getting stopped out for no reason. So what happened now? A pool of liquidity cleared out, tapped into this. So let's wait. Let's wait until something clear happens. There it goes. Bullish breakout structure. Can you see that? So now this day, Asian low is obviously a strong low, right? Can you understand that? Why? A pool of liquidity was cleared out. Okay, a pool of liquidity was cleared out, and then structure is broken. Okay, let me first show you, like because it's a new day starting, we have to look into the daily time frame, right? We forgot to do that. So on the daily, obviously, now yeah, we did have POIs. What is that? An order block and a rejection block. The next POI. Can you see that? But once you only once you do the multi-time frame analysis, you will know that anyway, you're not going to choose these areas. Why? Liquidity. Okay, you can understand that, right? Yeah, liquidity. Yeah. And not only that, like anyway, even if it taps into these areas or not, we don't care because it happened during Asia. See that? Who cares? Look at that. Okay, so it happened during Asia, so we don't care about that anyway. And then tapped into this 4-hour rejection block. Now it's starting to fly. And you got a bullish breakout structure. Okay. Now, if Asia is strong, what did I tell you? On the higher time frames, we will have a rejection block, right? So now on the 4-hour, we did have a rejection block in here. Can you see that? Okay, we did have a rejection block all the way down here. Okay, you can understand that, right? That could be even refined into this. But let me show you where I got the trade from. Now ask yourself, okay, price is moving up. Price is moving up. Like, can you see the reaction from this zone? Look at that. 80 pips up already. Okay, up by 80 pips. That is what happens when it taps into high quality zones. Why is it a high quality zone? Sorry, strong low, liquidity above it, high time frame point of interest, start a fly. Okay, but yeah, now let's put that aside. Now the market is moving down. Okay, now ask yourself, are we the only traders that are trying to buy it here? No, right? Because look at this. What is everyone else doing when it comes down? Oh, choose the order block that broke structure. How many are buying it here, right? Or is the demand that broke structure? Yeah. Okay, or is a rally base and a rally. Not only that, look at this trend line breakouts. How many are buying it here? So many, right? But I told you a drop in a bullish market is a hunt for sell stops, right? How do we know the market is bullish? Breakout structure. So where are the sell stops now? Below swing lows. See that? Now we are not going to buy from anywhere around here because everyone else is trying to buy it here too. We're going to look for something below it. Can you understand that? Okay. We'll be looking for something below it now because why? It is a pool of liquidity. Okay. It is a pool of liquidity right below this low. So what did we have? Now there's the 4-hour rejection block. So that is, we can cut that off. So on the 1 hour, right below this liquidity, we had another rejection block. Can you see that? We had another rejection block. Okay. Now a high probability zone. Why? Because we had liquidity above it. Because did these zones have any liquidity above it? No, nothing. Not high quality. But oh, this day, I did not buy it from the 1-hour rejection block. I bought it from the 15-minute imbalance. Can you see a tiny imbalance? Yeah. Why did I prefer a 15-minute imbalance over this one? I told you, Asian midline, extra confluence. Look at that. See that? Like, can't be anything random, right? Can't be anything random. Okay, so now, even though it was there, what I did was, I bought it there, but with my stop loss below the 1-hour rejection block. So what if I'm wrong, right? Even with the Asian midline, what if it want to tap into the 1 hour? I don't know. Okay, so what I'm doing is I'm buying it from the 50-minute imbalance that is with the Asian midline, but my stop loss is below the 1-hour rejection block. Can you understand that? Safe stop losses, because just for the sake of a tight stop loss, I just can't do this, right? I can't do this. Okay, what if it wants to get here? Okay, because anyway, my targets are all the way up here. Okay, so like it's a range like this, here to here, internal and then external. Can you understand that? Okay, so that's what's happening. So let's see. Okay. There it comes. Look at the reaction from the zone now. There you go. How many more are getting in now? So many, right? With that rejection. Okay, so many. Like I remember even on lower time frame, we got breaks and all that stuff. Okay, so more and more buyers are getting in, and then there it goes. Taps. Okay, everyone is taken out. We enter the market, and there it goes out once again. Can you understand that? Okay, you saw that, right? So that's it. You get that, you're done for the day. Okay, you're done for the day. Then what do? Wait for next day's Asian session to end. Look for another setup. Okay, you can look for another setup. So let's see now. Okay, let's wait. Okay, so now a new day starts. What do? We start from the daily. So now remember, we are in premium prices of the current range, right?
Yeah.
Reaching premium prices of the current range, we are inside of a sell zone. Can you see that? We are inside of a sell zone. Now, what is that? This was the weekly rejection block that we refined here. See that? Now we are reaching a weekly rejection block. So ask yourself, are you going to look for buys inside of a zone now? Inside of a sell zone? No, right? Not safe at all. Like this whole zone is a sell zone for us. So are we going to look for any buys inside of this zone? No. Okay, we'll only be focusing on sells. Okay, so let's wait for Asia to end now. Let's wait. Okay. Now, if you remember, at the time we marked out this rejection block on the weekly and refined it to 4 hour, did we have any type of liquidity below it? No, right? We had nothing. It was just clean price action. But look what they did. They created an Asian high below it. Not random stuff. See that? Liquidity. Once again, liquidity. Asian high right below our point of interest. Okay, but there's the thing. Now, the thing is now there's a weekly zone, right? A weekly and a 4 hour zone. Can we wait for a break on the 15-minute itself? Yeah, you can, but it's not that high, not a very good thing to do, right? So let's wait on the H1 to get, like, what are we going to wait for now? We're going to wait for a breakout structure to get the confirmation. Can you understand that? Okay, so let's see now. Yeah, let's see. There we go. Timing is perfect. Look at that. Right at 12:30 p.m. my time. That is 7 a.m. your time during November. Took out liquidity. Okay, took out the Asian high into a point of interest. Now let's wait and see. Okay, no breaks yet. Nothing yet. Nothing yet. Nothing. There we go. Did you see that? Bearish break. Strong high. So what do we know now? Major breakout structure bearish. Counter trend also turned bearish. Most importantly, after tapping into a higher time frame point of interest. Can you understand that? Now what are we going to do? Are we going to look for buys from anywhere around here? Are we going to look for buys? No, we're going to start looking for sells. Okay, so let's mark out the strong high. Okay, like if you remember that previous example I showed you how we like did the swing trade on GBP USD. Okay, like on the 1 hour we got the confirmation. We dropped into lower time frames to get the entry. Okay, from the range. Yeah, there we go now. Same exact thing. Okay, same exact thing. We're not gonna just like use some entry model for another setup. No, not that. Okay, so there we go. Strong high created. How do we know the high has created the low of the range? You have to wait for a bullish breakout structure. Okay, so let's wait now. Okay, there we go. So no setups this day. Actually, I did take a setup and got stopped out in here. Okay, so on the 1 minute time frame, because yeah, I have to show you that because in hindsight, stuff is very clear. But when you're looking at it in real time, you will not have this understanding. I know that. Okay, so yeah, on I did something stupid on the 1 minute in here. And yeah, stop cloud. Okay, so here we go. From here to here will be the range, right? This will be the range after this bullish break. So now you can already see the setup. Why are they going up? That is to take out the internal range liquidity, right?
Wait, sorry,
so what's the internal range?
Sorry for cutting you short there. Do you still usually go to the 1 minute to look for setups?
Nah, not anymore. Not anymore. Okay. This was like 1 year ago. This was November. Yeah, almost 10 months ago. So those days I used to deal with the 1 minute and the 5 minute. That's why I showed you all. That's why I told you even in here I took losses. Why? Dealing with the 5 minute and the 1 minute. Okay, but yeah, now you see how clear the higher time frames are, right? Okay, so that's the thing. So now you can already see the setup. What's your range from here to here? Why are they going up? That is to take out the internal range liquidity. What's the internal range liquidity? Swing high, swing high. See that? I told you, swing highs will be your internal range liquidity. Above that, what's the point of interest? Rejection block. See that? You have a rejection block, okay, on the 1 hour. But yeah, you don't even have to have that because you can do a turtle soup like I told you. Why? Anyway, your stop loss is only 3.6 pips. See that? Above the strong high. So who owns a point of interest, right? When your when your stop loss is only 3.6 pips. Okay, so there we go. And the next thing we take into consideration is what? Timing, right? So now what happened was it ran into Asia once again. Next day's Asian session. Can you see that? Ran into the next day's Asian session. So if it plays out during Asia, we're gonna miss a nice setup because we don't trade Asia. Then we'll have to trade London. But yeah, luckily, if I remember, yeah, didn't play out during Asia. Did you see that? So now are we gonna use the Asian high as a strong high and then look for look for sales from here? No, right? Anyway, we're not gonna do that because why? We have internal range liquidity right above it. Look at this liquidity. So what's the next thing we take into consideration? Timing once again. So this manipulation has to happen during London kill zone or London open. Okay, so 12:30 or 1:30. So let's see. There it starts to go up. Time is good. And there we go. Did you see that? Now what happened? Buy stops are activated because it ran above Asia. Okay. Order blocks are forming. See that? And uptrends are forming. How many are trying to buy it now? So many, right? So many are buying it. But us, what are we doing? We're selling it. There comes the momentum. Boom. Into the external range liquidity. Okay, so now what do? Now you take off around 40% and then leave the rest into the external range liquidity of the 4 hour. Why? Why are we doing that? I told you, because it tapped into a higher time frame point of interest and it gave us the confirmation, right? Major breakout structure bearish, counter trend turns bearish, okay, inside of a higher time frame zone. Timing is perfect, manipulation of Asia. Then we pay ourselves here, leave the rest into external range. And can you see how like all of a sudden, look how the bearish candles are getting bigger and bigger. Can you see that? The bearish momentum is increasing. Why? Because the range expansion has begun. So what happens? Yeah. There it comes. Don't worry about these pullbacks. It's only another chance of a re-entry. Now let it go into the targets. Did you see that? From internal to external. All right. Now see, this is exactly why we call this the corrective move. Look how long it took for price to reach from here to here. 7 days and 6 hours. Okay, but for it to reach from here down into the external range, only 4 days and 4 hours. Yeah, so corrective and the expansion. Okay, so now you see this, right? How do we know the expansion move begins? Taps into a high time frame zone, comes in line with the major breakout structure. Then from that day onwards, we start looking for sales, not buys anymore. Okay, we're not gonna just tell you, oh, strong low. You can even buy it, it's not gonna last long. Okay, from these areas. Okay, so yeah, can you understand this? Let me know. Was everything clear? Yeah, everything is clear, right? Yeah. Now let me give you the timings that I use for the sessions. Let's quickly run into current market. This is Asia. 2:30, 9:30. Please check with New York Times. Yeah, that's Asia. And London kill zone. London session. New York kill zone and the New York session. There we go. Okay, so yeah, these are the timings that I use. If I set it to London time, yeah, for you, Asia starts at 10 p.m. and ends at 5 a.m. Okay, starts at 10 p.m. and then ends at 5 a.m. Also remember, when you're marking out Asia, don't use indicators or anything because the timings will be different. Make sure to mark out the Asian session on the 15-minute time frame. Okay, mark out Asia on the 15-minute time frame, which means the highs and lows that are getting created from 10 p.m. to 5 a.m. on the 15-minute time frame, not the 1 hour highs and lows, not the 30-minute highs and lows, not the 4 hour highs and lows, 15-minute highs. Trust me, I backtested this. I'm doing this for a long time, so not a very long time though, but yeah, I got this from BTMM. Okay, so make sure to mark it out on a 15-minute time frame. Okay, that is very important. That is how you can get this midline stuff and all of that very accurately. Okay, so mark it out on a 15-minute time frame. And yeah, London kill zone is at 7 a.m. London session is at 8 a.m. New York kill zone is at 12 p.m. New York session is at 1 p.m. your time. Okay, so that will be the timings that I use. And when there is a shift in daylight savings time, all of this will go forward by 1 hour. Okay, all of this will go forward by 1 hour. So which means Asia will start at 11 p.m. and end at 6 a.m. London kill zone will be at 8 a.m. London session will be at 9 a.m. New York kill zone will be at 1 p.m. New York session will be at 2 p.m. Okay, so it goes forward by 1 hour because you can check the Forex factory to see if there is any change in daylight savings time. Okay, so yeah, that normally happens only once a year. I guess I don't know. We don't care. Okay, so that's about that. Okay, so is everything clear? Let me know. Was everything clear?
It is. It is.
Yeah.
It is.
Yeah. So if do you have any other questions that I should go through?
So looking at the directional bias like I talked about
Yeah.
earlier on, if I start my day and I'm trying to do using the Asia setup ranges during the London, do I is how important is the directional bias?
Directional bias is important, but now let me show you. Now this is a nice example of it. Let's see. Yeah, in these areas. Now look at this. Yeah, on a line chart, we do know that the major breakout structure is bearish. Can you see that? The major breakout structure is bearish. But if you go into the candlesticks, you can see that it's only a stop hunt below this. Now you might be confused, right? Now you might be confused, like, what are we gonna do? What are we gonna do? Don't worry, like I told you, we're intraday traders. If he is not in a good position to swing, patiently drop into a lower time frame. Okay, see what the higher time frames are doing. Now, what has happened was the 4-hour has created a strong low. Liquidity taken, structure broken. Because the thing is now, nothing clear on the daily, right? Nothing clear on the daily. Then after the daily, what's the next strongest time frame we have? The 4-hour, right? The 4-hour. Now on here, we do have a strong low stop hunt, breakout structure. So then once again on this strong low, what do we look for? A higher time frame point of interest. What did we have?
Wait, sorry, Dara. Can you go to that for? Can you go to the for?
Okay.
Yeah, that's breakup structure you just confirmed, the bullish breakout. If I were using the three candle,
high,
yeah,
if we're using low, yeah.
If we're using the three candle formation,
yeah.
Is there the candle to the right is not lower than?
Look at this. This right here, this is swing high we're using. So this high has a lower high to the left, a lower high to the right.
Okay, we're using the wick, not the body.
Yeah. Okay, so it could even be the wick or the body. Doesn't matter. Okay, like even if there was a body in here, we can still say the candle is lower to the left and the lower to the right. That's it. Okay, so it doesn't have to be a wick or a body. It could be anything. Okay, it could be anything. So now what do we know? Now on the daily, okay, now on the daily, one thing we know is that the daily isn't clear at all, right? There's nothing we could do on the day. The only thing we could do on the daily is mark out this point of interest that is on the 4-hour strong low. Okay, and then now let's see how we could deal with this the next day. Okay, so now we know that. What do we know? On the 4-hour time frame, this right here is a strong low. So if this is a strong low, this is obviously a weak high, right? If this is a strong low, this is a weak high. Why? Which means this internal range liquid, this will be external range liquid. So you can have this one marked out because you know that. Because now look at this one. Let me show you why it's a weak high. Now the market is moving down. Now ask yourself, did this high break any sort of structure to the downside? No, right?
Yeah.
Nothing. So which means, are we going to expect any sales from here? The only thing we can expect is for that high to get ran out. Can you understand that? Yeah. Okay, we can expect that high to get ran out. So now, like I showed you now in here, of course, I showed you the setup. We had the 4-hour rejection block. Okay, we had the 4-hour rejection block that is right here. And then what we do is we sell it with timing and all of that. Like this. Okay, so safe target will be the Asian low. Now see, this is why, like, if you only focus on the London Open setup, you don't even have to bother about the direction most of the time. Now look at this. There it goes. Taps, and it starts to calm down. You pay yourself, and if you want to, you can even hold a runner until these lows into the next reversal zone. What is that? The daily rejection block. Okay, so now when price gets here, there you get the confirmation once again. Can you see that? There we go. Taps, takes out. Yeah, let's go to a lower time frame to get the confirmation. There we go. Stop hunt, breakout structure. Can you understand that? Okay. So now from this day onwards, what are you going to do? Like until this high gets taken out on the 4-hour, right? It's not a strong high, right? Not a strong high. Like go to the 4-hour, you can see, is this a strong high? No. Did it break any sort of structure even on the line chart? Nothing. So until that high gets taken out, you can look for buy setups. You can look for buy setup. But once that gets taken out, it might reverse. That's another story. But yeah, see that? Until that high gets taken out, what you do is you start looking for buys. You start looking for buys every day. Can you understand that? Asia, because even in here we had a range. See, top fund, breakout structure, internal range liquidity. There it comes. See that? Is that clear? Okay, is that clear? So that is what we could do when the daily is not that clear. Okay, well, like that is what we could do when the directional bias is not that clear. Okay, so something like that. But most importantly, make sure you focus on these breaks because that is the direction. That is the ultimate direction. Okay, that is what's gonna show you the direction because you can see this, right? All of these were to the downside. That is why GU is still bearish. Okay, you can see that, right? Until we get these breaks, okay, we can't buy it. Okay, we can't expect long-term buys. Okay, yeah. Is that clear? Let me know. Is everything clear?
That's clear. One more thing. What
Yeah, bro.
qualifies a day that you don't trade?
A day I don't trade, yeah, like today. I told you, if Asia is trending like this, okay, if Asia is trending like this, nah, I'm not gonna trade anymore because see, was anything clear in here? Nothing, right?
Yeah.
Nothing. So simply, days like this, stay out. If Asia did this, just stay out. Like most Mondays, it will do that. Okay, just stay out. Like even on gold, nothing was clear. See, like Asia dropped like this, and then it started going higher. So I wouldn't take this. I would not take this anyway because why? Now, I was waiting for this rejection block to play out. Okay, but the thing is, timing isn't that good. See, price reached here like 2 hours after New York. So that's too late in the day. So I don't want to just take a trade and then wait for hours until it turns into my profits. No, like I want to go in and out. So which means I'm focusing on the kill zones and the session openings. Okay, so you understand that, right? So days like this, stay out. Okay, stay out. Just don't even bother to look at it if Asia has done this because like I can guarantee you if Asia does this, no setups will be clear. That the whole day will be messy. Okay, like today. So that is what happened. Okay, on lower time frames, if you really want to, you can do that. But I don't know how to do that. Okay, like I don't go into this time frame anymore. Okay, so yeah, just remove 1 minute out of the equation. It's messy. Okay,
So
so these time frames,
your
this is more
lowest
than
time
enough.
frame is M15.
M15. Okay,
When you
and
mark
like
out your
don't.
ranges,
Sorry, what's it?
when you mark out your ranges,
Okay.
is
Or,
M15
or
the lowest?
ranges. No, no. Mostly ranges will come from the daily 4 hour and the 1 hour. Okay. But the 50-minute and 30-minute ranges comes when price is within another point of interest. Can you understand that? So let's say price is inside of a 4 hour range. Okay. I'm sorry. Let's say price is inside of a 4 hour point of interest. Only then we look into the 50-minute and the 30-minute ranges. Why? To take the confirmation. Stop on breakout structure, internal range, and this only when it is inside of a point of interest. Okay, we're not going to just like all the time mark out 50-minute and 30-minute ranges. No, stick to 4 hour daily and the 1 hour range, daily 4 hour and the 1 hour ranges. Okay, and only use the 30-minute and 50-minute ranges when price is within a higher time frame point of interest. Can you
Yeah.
understand that? To get the confirmation entry? Okay, now don't worry, once you rewatch the session, it will answer a lot of questions you have. Okay, like, and make sure you do the back testing. Okay, it is very important. Okay, because like we can't just go to the charts the next day and then wait for price to run above Asia and sell. No, okay, if it's that easy, then everyone will be trading. Okay, so don't do that. Make sure you do the back testing first. Okay, that's very important back test. And yeah, if you have any questions, just drop me a message on Telegram with your with the chart and a voice note. Okay, that way I'll know what your question is. Okay.
I will. I will. Thank you
Okay.
very much.
Yeah. So everything's clear, right? I hope everything is clear. Okay.
Yes, yes, yes.
Yeah, yeah. All
Thank
right,
you
bro.
very
Then
much. Yeah.
that's it from me.
Yeah.
No problem, bro. Have a good day then.
Thank you. Yeah. All the
Okay,
best.
bro.
All right.
You
Bye.
too, bro. Bye bye. Take care.